Sweet.
Okay.
Okay.
So, and the thing is, my premium just ended the premium account, so I'll wait till Black Friday. So
Uh-huh.
I'll just teach you all of it right here. Okay, that
Sure.
won't be an issue. Okay. So, do you have any specific questions? So, will you ask them along the way?
Yeah, sure. I can ask them along the way. Definitely.
Along the way. Okay. And the thing is, you know the basic smart money stuff, right?
Yeah, yeah.
I'm sure you do. Okay. So now the problem is like how to choose the right order block, the right POI.
Yeah.
Yeah. Okay. So I'll show you what I basically do.
Mm-hmm.
Like so. Okay. Let's start. So say this is the weekly time frame. Okay.
Mm-hmm.
So now most of the intraday traders, what they think is that for us, like for intraday traders, the most important charts are the 4 hour, the 1 hour, 15 minute, 5 minute, or the 1 minute. That's how they think. Okay.
Mm-hmm.
But for me, the most important chart is the weekly chart. Okay.
Okay.
Because you just have to determine just the next candle. Okay. Let's say that we are getting the bias for the next week. Okay. We just have to determine one single candle. If this candle will go up or if this candle will go down. That's all we have to determine. Okay. So can you understand what I'm telling?
Yeah, yeah,
It's just one single candle. The next candle, it has to go up or down.
yeah.
Either way, but it cannot go anywhere else. It has to go up or it has to go down.
Mm-hmm.
So that is what I would do. Okay. And then once I get the bias, what I do is I'll just play along. Okay. And
Mm-hmm.
then if we drop down to the daily, I'll drop down to the daily and I'll find what are the reasons for market to go up or down. Okay. So now on the daily, this was our structure. This right here.
Mm-hmm.
Price went higher
That's
highs.
that's what I was definitely going to ask you for. One of my
Yeah.
issues is like directional bias.
Directional bias. Yeah,
Yeah.
I'll tell you how I get it.
So this is
Okay.
perfect.
Yeah. So this is how I do it. So price went higher highs, higher lows, higher highs, higher lows, and then took out this high, higher highs, and then it came back down. So now what we could anticipate is that price will go back up, making a higher high. That is what we're gonna target because we're in a bullish market structure.
Mm-hmm.
Okay. So now once a range is created, so I'll tell you this: there's internal range liquidity and external range liquidity. Okay. So
Mm-hmm.
once a new range has been created, there will be internal range liquidity within that range and external range liquidity outside of that range.
Mm-hmm.
Okay. So now price did this. This was our range now. It went higher highs, higher lows. This candle took out liquidity from these lows and
Yeah.
then broke structure to the upside. Okay. So now we can classify this candle, this bullish order block, as a strong low. This low because it did this thing. It took out liquidity from these lows and then it broke structure to the upside.
Mm-hmm.
Okay. So once that happens, that becomes a strong low. So to be a strong low, it has to do a manipulation and then break structure. Okay. So
Mm-hmm.
now we can expect this low to hold. Okay. So what I would do is I'll just wait until price gets here. That's the very basic. That's how the smart money traders are taught. That's the very basic.
Yeah.
So I'll tell you this. So now price went up and then came back down into this candle, the last push down before the push up, and then pushed price higher. Okay, and then took out this high, took out this high.
Mm-hmm.
So now our new range would be this, from this low to this high. Okay, and even though this seems like equal, relatively equal lows, but they were not equal lows actually. Price took out liquidity from these candles. This
Yeah.
candle took out liquidity from all of these lows.
Mm-hmm.
It took out liquidity and then went higher. So like I told you, this candle did the manipulation and then broke structure right here.
Mm-hmm.
It broke structure to the upside. So now a new range has been created. So now our new range would be from this low to this high. Okay. So once a new range is been created, now imagine we were right here. Okay. So
Mm-hmm.
now external range liquidity was here. Previous external range liquidity was, now this was the previous range from this low to this high. That was the previous range, right?
Yeah.
So then price came back inside the range, got all of this internal range liquidity, and then rallied back up to get the external range liquidity. Okay, so once the external range liquidity has been taken out, it comes back inside of this newly created range to get the internal range liquidity. Okay,
Mm-hmm.
so by internal range liquidity, what I mean is not only equal lows or equal highs, not anything of that sort. I mean the inducement. Okay, the
Yeah.
inducement is the most important thing before
Yes.
choosing a POI. Okay, inducement or the trap or anything. So what I would basically do is once a new range has been created, I'll mark the discount and premium prices. So now I have a rough idea that anything above this, below this would be a discount price, and anything above this would be a premium price. So now
Mm-hmm.
price to push back higher, it has to come inside the range and get all of the internal range liquidity, and then it has to come into a premium. I'm sorry, for a discount price for sure,
Yes.
because only once price is lower, people would buy again. Not the
Mm-hmm.
people actually. Now we're talking about smart money. They'll push price down lower just to buy again. Okay, to
Yeah.
accumulate positions again. So now what we could anticipate is that now it came back, and then now what we could expect is the price to go higher because now the intentions of the range has been fulfilled. Because
Because
you
it
see,
took out the internal range
took out the
liquidity.
internal range liquidity.
Yeah.
Yeah. And now what I mean by liquidity is not only equal highs and equal lows.
Mm-hmm.
Okay. What I mean is this. Now can you see what price did here?
Yeah.
Took out liquidity from these lows and then broke structure.
Mm-hmm.
Okay. And then broke structure to the upside right here. It broke structure and then it retraced. Okay. It retraced and then went back higher. Okay. So now what the retailers are taught is that if after break of structure, if price comes back and retraces and then breaks structure once more to the upside right here, this the retailers would consider this as a strong low. Okay,
Mm-hmm.
because it retraced after the break of structure and then gave us another break of structure. You see that?
Yeah.
So now what the retailers are taught is to place their stop losses and sell stops below this.
Mm-hmm.
Okay, because they think this is a strong low. Okay, so then and the next thing is smart money traders would go long on this POI, right, on this order block.
Yeah.
Yeah, so smart money traders would do that. But I told you the main thing we should look for is the inducement.
Yeah.
Okay,
The one
by
below it.
inducement, yeah, the inducement means the thing like the market makers will force you to do something wrong. It will show you something wrong
Mm-hmm.
so that you're getting trapped. You see that?
Mm-hmm.
So that you get trapped. So within this range, like once a new range has been created, we must identify the trap. Okay, we must identify the trap. So now what is the trap here? Now we've identified the trap. By trap I mean even the breakout traders. Okay, even the breakout traders would place their sell stops below this. Okay, they will place their sell stops below this.
Mm-hmm.
And even the smart money traders would go long on this, right? Even they would go long on this. And then the people who trade with the trend and those stuff, they'll also place their sell stops below this. And the people who bought here will place their stop losses underneath it. Okay,
Mm-hmm.
so now there's a huge, this is a liquidity pool. The single thing is a liquidity pool.
Yes.
Okay, so because smart money is not a new thing. Okay, smart money is not a new thing. Like the banks know that we do smart money stuff, like we trade order blocks, all this, the banks know that. Okay, so they will show you order blocks all over the place. So now the way we choose the right order block is that the liquidity will be fed into the order block, which
Mm-hmm.
means now this has to be taken out for sure, because I gave you the reasons why this has to be taken out. Okay,
Mm-hmm.
so now you see this is like this is inducing something. So once we see the inducement or the trap, what we do is we will determine the POI below it. Okay, because we know this will get manipulated for sure.
Mm-hmm.
That's what we know. So now we have this clear order block right here, you see, and
Mm-hmm.
then this was the daily order block. Show you, this was the daily order block right here. This was that last push down, and then what we do is we refine it. Okay, we
Yeah.
refine it down to the 4 hour, and now we've identified the trap. This is a trap. That's the trap. So we're going to look for something. Now you see how we avoided all of the other POIs, like we avoided this, we avoided this, we avoided this, we
Mhm.
avoided this. And now we have only one to choose. Okay, we have only one to choose. That's this. Okay, that's the daily order block. And then now we're going to refine it to where the imbalance is. Can you see this imbalance? The
Yeah.
last point of imbalance within that newly created range.
Yeah.
Okay, so now we're going to refine it down to here. And then what the market makers does is, like, after an inducement, like, what they do is they'll mitigate out of their positions, right? That's why they come back down to mitigate something, because the smart money, they, like, at least to do this little amount of manipulation, they have to put in a huge sell order, right here, like
Yeah.
500 lots. They have to sell it from here, and then price went back higher, right here. So
Mhm.
then now the sell order they put here is in a negative position. Okay,
Mhm.
because they sold here and now price is here. So the sell order they put here will be in a very, very big loss, because for a sell to profit, price has to move downwards. Now
Mhm.
price has gone upwards. Okay, so now the reason why they're coming back down is to mitigate out of their loss. They'll either close it at break even or just close it with some profit.
Mhm.
Okay, that's the logic behind a sponsored. That's how they call it, a sponsored candle or an order block.
Mhm.
Okay, and the next thing we could see here is, now you see how they're taking money from one place to another here. Mitigated this, that's order flow,
Yeah.
and this mitigated this, and then the next point that was not mitigated was this. Okay,
Mhm. Could I
and
ask a
what?
quick question? Sorry.
Yeah, sure.
So the way that I've been looking at the market, using
Okay.
order blocks and stuff, I look as like I like the induction. That's something I started looking at.
Yeah.
And with my rules for order blocks, it has to have
Yeah.
like the imbalance before it.
Yeah,
Um,
it has to have an imbalance.
but in this, um, is it okay if I annotate for a sec?
Yeah, yeah, sure, sure.
Yeah, so you said for this order block, oh, I didn't draw it so well, but for that order block, would you
Yeah.
ever, like, would you use it even though it looks like this has mitigated it? Like, would you use it here?
No, the thing is, I'll show you this.
Yeah.
Okay, what price this was? It took out liquidity
Mm-hmm.
from the previous lows.
Yes.
Okay, it took out liquidity from the previous lows. Here you see a
Yeah.
little tiny wick that took out liquidity and then went boom, shot higher. Okay, and then can you see it went higher and
Yeah.
then came back down. Okay,
Yeah.
now the real mitigation comes here. You see, price, what it did was it went higher and then came back down, and you see this candle opened right here. Okay, and then it went back up, and then this opened right here, it came back down, and this candle, this specific candle, okay, you see this candle opened right here. Okay,
Yes.
and you see that selling pressure that candle had. See? It sold back down to mitigate this, and then boom, it went higher. Okay, which means the most amount of liquidity or the money is right here in this wick, because this wick is what mitigated this.
Okay.
You see that
Yes. Yeah.
this wick is what mitigated this right
Yeah.
here.
Okay.
Okay, so then it came back down, and then it went back up. You see how there's order flow now. Now
Yeah.
there's order
Yeah.
flow.
Perfect. Thanks.
Okay, and the next thing is, I'll teach you everything. Now I told you where the inducement is. Okay,
Mhm.
so now within, once a range has been created, so within the range, I told you there will be a trap that will trap smart money traders, like all types of traders. Okay, all types of traders. So now we've identified the trap. So we need to look for something underneath it, because we know for sure this will be taken out, because we know this is the last trap they should come into.
Mhm.
But now what did price do? Okay, what did price do? It came back down, but it never mitigated this. You see that the imbalance is still left.
Mhm.
Okay, they took out the trap, but they never mitigated this. Okay, so I told you, once we identify the inducement or the trap, we always go for the closest order block. Now where do you think this mitigated? Okay, I'll tell you.
Mhm.
Now I'll tell you about the wick. Okay, so now you see this, you see this wick right here.
Yeah.
Okay, price opened here, and then pushed back down. Sellers pushed it back down, and then boom, it went high, which means this wick has some sort of selling pressure in it,
Mm-hmm.
right? It has some sort of selling pressure. And on the 15, now we're on the 4-hour time frame, and on the 15-minute time frame, there will surely be an order block.
Yeah,
Like
definitely.
once the base of the candle has been the there's always 2 order blocks within the range. Okay, within a week. I'm sorry.
Mm-hmm.
So the first order block will be on the base of the wick right here. Okay, and the second one will be on the 50%. Okay, right here, right here. Okay, can you understand that? The
Yeah.
first one will be, yeah, the first one will be at the opening,
Mm-hmm.
and the second one will, like, if the opening has been mitigated, we can expect price to come back into the 50%. Because let's see if we can go back inside this. I can show that to you clearly.
Yeah, that's something I've been noticing more. I look at them like a hidden order block.
Yeah. So now here it is.
Mm-hmm.
So that's the 4-hour week.
Yeah.
Okay, you see there's a full bodied order block.
Mm-hmm.
And then if you go back down to the 4-hour, okay, so now what we can see is this has been mitigated, the base is all that. The
Yeah.
base has been mitigated.
Yeah.
Okay, that 15-minute order block has been mitigated. So I told you the 50% is always available. Okay,
Okay.
50% is always available. So the 50% would be right here. Okay, would be right here. So we do not buy once price gets into this. We will watch price action.
Yes.
Because there's a huge manipulation coming, because this is a liquidity pool, right? This is a liquidity pool. I told you why. Because even like all types of traders will be taken out over here. So price could just come back and boom, it can like tap even into this. Okay, but it always comes to the closest one. So now we expand this further. Okay, you saw that? It
Mm-hmm.
came, it wicked. That's why I told you we always need to wait.
Mm-hmm.
Okay, so now the thing is, this happened. This, like, it came back down. It mitigated this the week, and
Yeah.
then why did it go back higher? Okay, now the thing is, after every major high or low has been taken out, there needs to be a pullback. That's how we play ping pong. Okay, after every major high or low has been taken out, there needs to be a pullback. Because the reason for a pullback is, now on the weekly, from this low to this high was our range, right?
Mm-hmm.
So now on the daily, okay, on the daily or the 4-hour, now you see how price went up. Price went up like this. It went higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, took out the external range liquidity, and
Yeah.
then broke structure right here. Okay, and now we're retracing back down. Why? To get the internal range liquidity, because external range liquidity has been taken out, and the next target is the internal range liquidity. Okay, so then price broke structure, came back down, and then retraced, came back down, retraced, and then boom, this was NFP, came back down heavily. Now imagine this did not happen. Okay, now what is our range? From this high to this low. Our intermediate term range is from this high to this low. Okay,
If what? Sorry, can you say that again? If what didn't happen, that will be our range.
okay, no, now I'm telling you,
Oh.
just ignore all of this for a while.
Oh yeah.
Okay?
Oh, sorry. If that
Okay,
doesn't.
yeah,
Yeah.
because
Yeah.
I can't use the replay tools. I'm sorry.
No worries.
So we were right here. Okay, so right now our range is from the intermediate term range is from this high to this low. Okay,
Yeah.
from this high to this low. So then where will it pull back into? That's the question now. So now this low has been taken out. Like I said, what happens is it will take sell stops, and then it will take buy stops, and once again it will come for the sell stops, and then it will go for the buy stops. That's what they do. They seek liquidity, and then they destroy all of the traders who place their orders there. Okay, so price took out liquidity from this low right here, because like I told you, everyone was trapped here. Okay, so then why is this pullback coming? Because the thing is, now there are breakout traders who, like I told you, they'll place their stop losses below this. Okay, Now,
Yeah.
if price continues to the downside, the people who placed their sell stops here would be in profit,
Yeah.
right? Would be in profit. So the market makers or the ones who control the market, they do not want us to profit. Okay, they do not want us to profit.
Mhm.
So what they do is they come back down and then take out stop losses, and then the new orders, so the smart money traders who saw this order block and then bought here, they'll take out their stop losses and then they'll trigger the sell stops. Okay,
Mhm.
so once the sell stops are triggered, the stop losses would be higher. Okay, so then
Mhm.
they'll go back and then take that stop loss. Okay, so now can you understand that?
Yeah, yeah, for sure.
Yeah, yeah, awesome. So then now we know our new range from this high
Mhm.
to this low.
So that's something that I wanted to ask maybe a bit more, because I'm not the, for some reason it's probably something so simple, the like range, but
Yeah,
for some reason I can never determine the range when, because I'm going through
yeah,
different time frames and then like there's different breaks in structure.
yeah.
So
So always do this. Mark out the range. See, this is I use FXCM. I'm just using this to show you. See,
mhm,
I've marked out everything. You see that? Because then I don't get lost. Here you see that? I've
mhm.
marked the higher time frame range and the intermediate term range. Everything is marked. So then you don't get lost.
So you
Because then
marked
you know,
out the daily range first.
yeah, the daily range first.
Hmm.
You see that? I
Yeah.
marked out the daily range and I'll mark out the trap, and then I'll do all of that, and then I'll mark out the retrace. Because so you know, for price to come back down here, they have to do an accumulation.
Yes.
Okay, to go back up, they'll accumulate orders. So
Mhm.
accumulation always comes in a bearish counter trend. Okay,
Okay.
so you can remember that accumulation always comes in a bearish counter trend.
Oh,
Distribution always
sorry.
comes in a bullish counter trend.
Sorry,
Okay,
my internet, it cut out for a sec. You
okay,
said accumulation always
yeah,
comes in a bearish trend.
counter trend, a bearish counter trend, okay? A bearish counter trend.
Uh,
Okay,
bearish counter trend.
and then distribution always comes in a bullish counter trend. Okay, distribution always comes in a bullish counter trend. And
Okay.
how do we know the distribution is over? They'll give us a breakout structure.
Hmm.
Okay, and that is simply Wyckoff. Now you don't have to like see, this was a perfect schematic, a Wyckoff schematic. You may not use it, but I'm just telling you, this
Yeah.
was a perfect Wyckoff schematic. So after this, we should expect price to pull back down. So I don't use Wyckoff, honestly. I use only the 3 laws of Wyckoff. I don't use schematics. So what happens is it broke structure right here, and then went back higher, took out liquidity from these highs. That was NFP, and it fell back down. So now we have a new range from this high to this low. Okay, on the higher time
And
frame. Now that sorry, I'm sorry.
and with so with that new range, do you,
Yeah,
would you also, like, let's say it's in the daily, like the daily, both the, sorry, the daily range and the 4 hour range, they both have
yeah.
to be in premium in that area on
Premium.
both of
Yeah,
them,
exactly.
not
So
just for one of
you
them.
see, not just for one.
Okay.
Okay, you see there. This
Yeah.
was the weekly range,
Yeah.
and then see, this was the daily range. I think both of them were at the same position. Yeah, see,
But you mean the
exactly.
daily and
Yeah, this was the
wow.
whole weekly. This was the equilibrium of the weekly range.
Yeah.
Okay, which means anything above this would be a premium price.
Uh-huh.
And then this is the equilibrium of the daily range. You see that both of them are at the same point.
Yes. Yes.
Okay, so we know anything above this is a good thing for us to sell
Okay.
back down.
Yeah.
Okay,
Cool.
so
Cool.
now what we would see is once this range has been created. Okay, once this range has been created, once again we do the same thing. We identify where the liquidity is. Okay, where the liquidity or the where the trap is. Okay, so now when people saw this going up, like it took out this liquidity, and then the smart money traders, so the others, everyone would have thought now price has done what it needs to be done, like it has taken out internal range liquidity. So
Mhm.
many traders, I saw them, many traders were doing this. They bought here and then they were targeting this.
Mhm.
Okay, because they thought we were in a discounted price and all of those. But what we should realize is that they have not mitigated out of their losing position. Order flow is still right here, and the
Yes.
imbalance has not been filled yet. Okay,
Mhm.
so now we know that this move upwards, okay, this move upwards is just the pullback. Okay, it's just the pullback inside this range to get the internal range liquidity. Okay, you get that?
Yes. Yes. Definitely.
Cool. And then, so now we have the discounted premium. We know anything about this area right here would be a good point for us to sell.
Sorry, could I
And
ask
then,
just one thing quickly?
yeah,
So these blue dots that you just marked now,
that's the range.
that's the range, but it's not,
Yeah,
that's the internal range
that's the
liquidity.
internal range. Yeah,
The external range liquidity is the far one. Yeah, gotcha.
yeah.
Okay, yeah.
Okay.
Cool.
Now, but the thing is, now within this range, okay,
Mhm.
within that range, where is the internal range, external range liquidity from this high to this low?
Yeah,
Okay,
that's.
and now, and we're bearish.
Mhm.
Okay, the most recent breakout structure was a bearish breakout structure right here.
Mhm.
Okay, so now we're interested only in selling because the most recent breakout structure was a bearish one.
Mhm.
Okay,
Yeah.
so what price did was it went high and then came back down. Now, where is the external range liquidity? Right here, below this low.
Okay. Yes.
You
Sure.
see that? Now, if price went back up and then broke this high, okay, then this would be classified as a strong low because it took out liquidity from those highs and then it broke structure, a major structure.
It has to
Okay, it
break the
broke structure.
external range.
Yeah, it has to break. Yeah, it has to break out from this right here.
Okay.
So now we know our range from this high to this low, and then we know anything above this would be a premium price. Okay, so now what we do is we determine where the most amount of liquidity is. So most of the traders, what they were waiting for is this. Once this push up came, they were looking at this right here to sell
Yeah.
back down. Okay, but why didn't price come there? Okay, because I'll tell you why. This, for one, this was a climax reversal. Have you heard of it?
Oh, a
Maybe you
climax
have.
reversal?
Yeah, a climax reversal. This is what
No.
we call a climax reversal, which means like this happened with news, right? This
Yes.
happened with news. So then price went higher and then shot back down, like it tanked down very heavily.
Yes.
Okay, you see, even this imbalance was around 100 pip imbalance, I guess. Yeah,
Yeah.
a 91 pip imbalance. Okay, that's what we call a climax reversal. Price just goes up and then it shoots back down. Okay, it shoots back down.
Mhm.
So once that happens, price will always come back into the breaker right here. You know the breaker block, right?
Yeah.
Price will come back into the breaker block because this is where they started buying. This is where they put the buy order, and this is where they put the selling order. Okay, so now
Mhm.
price has no reason to go back up, and the most important thing is, you see, there is no inducement. This has not been induced because you see below this there is nothing. There's nothing.
Yeah.
You see that? Now, even though now the central banks are the people who wants to fill imbalances, okay,
Yeah.
but the banks and the market, and the other hedge funds and stuff, they do not want to fill the imbalances. They don't care. They care only about their money. But the central banks, they are the ones like who needs to balance the price action.
Yeah.
Okay, they wants to come back here, but the banks don't care because they have a huge pocket. So for the banks to do something, there need to be an inducement. Okay, now if price went up like this and say this happened, it came back down, and then imagine this happened. Now
Mhm.
we can target this because there's an inducement right
Yeah.
here, a
Yeah.
double top. Okay, so it never did that, right? So
Mhm.
there is no reason for price to go back up. There is no reasons for bank to go back up right here. Okay, so
Mhm.
now, okay, now we're gonna ignore this. Now we have three, one, two. We have two more points of interest. Now, would you sell from this low or this low? And then
Odds.
now what we would see is,
Yeah.
okay, so now we drop back down, and then we're completely ignoring this imbalance because we know there is no reason for price to go up there.
But there's no
Okay,
inducement.
there's no
Yeah.
inducement, so there is no reason. So now, where is the inducement? Okay, I told you intermediate term structure is always liquidity.
Mhm.
Okay, because on a lower time frame there are people who scalpers and everyone, they look at only the lower time frames. That's why
Mhm.
they get lost. Okay, price came down like this. You see, it came lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then lower lows.
Mhm.
Okay, so now, so imagine on the way back down, these people trusted these highs, right? They trusted these highs to hold. Am I right? Because we were on a
Yeah.
bearish trend,
Yeah.
and then we were creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. That's how we came. So on a downtrend, the lower highs are always protected.
Mhm.
That's how the retailers are being taught. Okay.
Mhm.
So now, so what they basically do is they think if this lower high gets broken. Now imagine price went lower highs, lower lows, lower highs, lower lows, and imagine if this broke upwards to the upside. Okay, what they do is they will place their buy stops above lower highs because they think that's protected, and they
Mhm.
think if it goes higher, it's going to keep continuing higher, breaking structures. That's how they're taught. Okay, so they place their buy stops on previous lower highs like this, on this, and on this, on this too. Okay,
Mhm.
so now, sorry, now what we would expect is, now we know price broke structure right here, took out liquidity once again from this low, and took out the
Yeah.
major trap right here, and then took out, once again it took out liquidity from this low, and what we should realize is that all of this is happening inside the 50% of this wick, like I showed you. Okay,
Yes.
all of this is happening inside of a point of interest. So now we know that this low has been taken out, and I gave you the reason why it should give a pullback, because if it keeps going down, the people who put sell stops here would be in profit. Okay, so
Mhm.
they do not want us to profit, so we
So,
know that price needs to go back up. What? I'm sorry.
um, didn't it break through that the wick?
Which one? This one?
The yeah, didn't it break where the
Yeah.
blue circle is? It broke through the wick that you
Yes.
said was the point of interest.
Okay, so what it did was this: it came back down,
Yeah.
took out liquidity, and you see, after every major high or low has been taken out, there needs to be a pullback, because or else these guys will be in profit. The people who put sell stops under this would be in profit.
Yeah.
So you see that it wicked it down and then went higher,
Hmm.
wicked down and then went higher. That was like a, yeah, the 36 pip move.
Hmm.
Okay, so imagine if people who put sell stops here, the stop loss would be around 30 pips higher.
Hmm.
Okay, so now they'll be taken out. Okay, but
Hmm.
then price came back down, and then went back higher, taking out this low. It took out this low now. Okay,
Yeah.
took out this low, and what we should understand is that all of this is happening inside of a POI. Okay,
Hmm.
and then price took out liquidity from this, and then broke structure. Okay,
Hmm.
broke structure, and then now once this break of structure happens, we know price is starting to pull back now. Okay, but where is it pulling back to? Internal range liquidity. And where is internal range liquidity? Above all of these intermediate term highs, the previous protected highs, this high, and this high.
Hmm.
Okay, but now the thing is, if you go back to the 4 hour, if you go back to the 4 hour, you see there's nothing above this. There's no point of interest above this, right?
Hmm.
Just like nothing, because
Yeah.
this will be too high. You see, the people who will place buy stops here. Okay, now it will get activated right here, and then once it goes back up, they'll be in profit here. It's like 25 pips.
Yeah.
Okay, I told you we should always choose the POI closest to the inducement.
Yeah.
Okay, closest to the inducement. Now you see this, let's go back down to the 1 hour. Now we see this. Okay, this high has induced this high.
Hmm.
Okay, and this high has induced this high, and then what happened, I'll tell it to you like this.
Yeah.
Now once price broke structure, right here, at some point it has to give us a pullback. Okay, It has to, because now we're creating a new range from this low to this high. Okay,
Mhm.
you get that? Because
Yeah.
it broke structure, and then we created a new range from this low to this high. But this is how we play ping pong. Where will the next pullback come from? Okay, I told you, pullbacks come from where there I'm sorry, where there was previous strong or protected highs. Okay,
Mhm.
once a major high or low has been broken, we will get a pullback. So you see, this is a major high, and then people, what they do is, that's why we call them the dump money. They'll place a buy stop over here. They'll think this low high is protected. Okay, so
Mhm.
then if it keeps continuing going higher, now since it broke structure, now we know we're bullish on the short term. So if price keeps going higher and higher, these guys who put buy stops over here would be in profit. Okay, now
Mhm.
this is the inducement, and even the smart money traders would take this as an order block to sell from.
Yeah.
Okay, so now even the smart money traders are trapped. Okay, but now what we should do is we should see the closest one from the inducement. Okay, so now we could expect a reaction from this, because why are we considering this as a strong POI? Because of the inducement.
Mhm.
Okay, inducement means that it makes people do the wrong thing.
Yeah.
Okay, it makes people do the wrong thing. So you see
And
that?
and when we looking for the sell now in that area that you just
Yeah, we
did,
should know that it is just a pullback
yeah,
to this range. Yeah,
and it's just, and now we're just using the range of from where you did now, that low
yeah,
there to the
from
nearest
this
high.
low. Yeah,
Okay.
from this low to this high will be
Yeah.
a new range now.
Hmm.
Okay, from this low to this high.
Sure.
And now, where will the pullback come into? Okay, where will the pullback come into? Where can we take profits for this pullback? So once, like I told you, price went up and created this range from this low to this high. Okay, it created a new range. So now, where, like, once a new range has been created, we ask ourselves where the liquidity is at. Okay, where will the liquidity be? So now, can you see this clear order block, like a very clear order block?
Yeah.
So now, how many people would have thought this is the right order block? Okay,
Yeah. Plenty.
like
Yeah.
many, like everyone would think this is the order block, because it was a push down, and then the price continued, and then it was the one that broke this structure.
Yeah.
That's how they would take it. But
It's
then
improving.
imagine, yeah, then imagine how many stop losses would be below this.
Yeah.
Like so much. All the newbies to smart money would take this, right? Everyone. They'll just buy from here. They'll just buy from here. So now what we should know is that this is a pool of liquidity, and on a lower time frame, this was a push down and then went up, which means this was a higher high, higher low at some point, and then higher high. Okay. So now the people who trade smart money and the retailers and everyone, they'll think this low is a strong low because this was the one that broke this structure. Okay, and then they'll put sell stops, stop losses, everything like I told you earlier.
Mhm.
And then this becomes a pool of liquidity. This single order block becomes a pool of liquidity. And like I told you, smart money is not a new thing. They will show you exactly what you need to see, and then they'll just stop you out. And
Mhm.
then you'll be left wondering why the smart money won't work. It works. It works, like if you know where the liquidity is. Okay. Now
Yeah.
see, by liquidity, I didn't tell you equal lows. There is no equal lows right down here.
No, it doesn't
Okay.
have to be.
There's not even a trend line. But now what acts as the liquidity or the trap or the inducement? This order block. This is liquidity now. You see that? This
Mhm.
is liquidity now. Okay. I hope you get that.
Oh yeah, yeah. That's something that
Okay.
I use now, the inducement and stuff. Yeah.
Yeah. Okay. So now since we have this, we're always looking for something below it. Okay.
Mhm.
Always we look for something below it. So you see this wick, I
Mhm.
told you the base of this wick has been mitigated. You see, the
Mhm.
base of the wick has been mitigated by this guy. So the 50% is still available.
Mhm.
Okay, the 50% is still available. So I'll wait for price to get in here, 50%, and then you see that, you see
Mhm.
that this has been taken out. Okay, like once I see this, I know like for sure this will be taken out. Like I'm 100% sure this order block will be taken out
Mhm.
because of all that liquidity. You see that?
Yeah.
So what we should do is always look for POI underneath it. Okay, underneath it. Or else if it
Mhm.
takes out the trap, you can enter with a break of structure on a 1 minute time frame. And then
Mhm.
once again, you can target this high. Okay,
Okay.
and then
Oh.
where will the next pullback come from? Okay, now this high, low, and then
Sorry, could I
now
ask
created.
something quickly?
Yeah,
If if this wick, if the low of this wick was broken like that, would we
yeah.
then we wouldn't use that area?
So then, which area you mean?
Sorry, so if you had like, yeah, this 50%, right? And we're
Yeah.
expecting we want to enter on a 1 minute break of structure there. But let's
Yes.
say here's the bottom of that order block because of the wick
Okay.
there, and price
Okay.
went broke through it like that.
Yeah. No, even like now the thing is we've identified what the trap is. Okay.
Mhm.
So now within this range from this low to this high, this is the internal range liquidity.
Okay.
Okay. This is the only internal range liquidity they are seeking for.
Hmm.
Okay. So once price, like you don't have to necessarily take this order block. Okay. Now even if price just takes out this low, anything below this low would be what you call an entry opportunity, an opportunity
Yes.
to enter,
Okay.
because
Cool.
we know that the internet liquidity has been taken out now.
Hmm.
Okay, so then we would buy here and then exit here. Now if we want to play ping pong, we need to know where the next pullback is coming from. So I told you, pullbacks comes after a major high or low has been taken out. Okay, so this was a major high, right?
Hmm.
This was a major high. So what we do is we wait until price goes above it, and once the break of structure happens within this range, we're selling it down. We're selling it down. Okay, because for sure a pullback has to happen, because or else the people who put buy stops here would be in profit.
Hmm.
Okay, and then you see, even though there were a stacked amount of highs over here, like this will act as a pool of liquidity, right? Because
Hmm.
there's a lot of highs over here.
Yeah.
Like even though there are, like, what the smart money traders are told is that do not sell from areas like this, because there's a lot of liquidity above this
Yeah.
stacked highs. Okay, but now we can trust it because there is an inducement below this. You see that there's an
Hmm.
inducement, because now price will take out this liquidity, the buy stops and the stop losses, and then pull back. Okay, this was a little trade, like a 36 pip. That's cool. So then
Hmm.
price went back up, and now we know that this will also be acting as liquidity. Okay, but on the 4 hour, it has nothing clear to go into, right? There was nothing clear to go into. If this high has been taken out, it would have been a very different story.
Hmm.
Okay, it would have been a very different story. So now this is the only place price could come into, because now it makes sense, because if price goes back higher, it like it has no reason to go back higher. I'm telling you,
Hmm.
because this is an inducement. Yes, for sure this is an inducement, but it has no reason to go back higher, because see, there was just a liquidity void right here.
Yeah.
Okay, there's nothing clear price could go into. So now we're taking this as our order block. Okay, so see, we take the right order block, we do not guess, we do not take this, so anything else, not this. So then if you go back to the 1 minute, 1 hour, so now what happened was, you see, once again these highs.
Hmm.
Okay, this was a lower high at some point, right? Which was a protected high.
Yeah.
Once price was coming back down, this was a protected high. Okay, so what price did was it took out liquidity from this high. Okay, took out liquidity, and you see even equal highs were formed.
Hmm.
You see that even equal highs were formed. So price took out liquidity from there, and let's go to the 15 minute. So what happened was, price like created some sort of equal highs and then came back down, and it shot back higher. Okay, and it mitigated the 4 hour order block. Okay, now what happens is this: it mitigated 4 hour order block, and then if this high was to hold, it has to come back down and break this structure. You get that?
Yeah.
If this high was to hold, like
It
now
has to
it
break
did
it.
it did the manipulation and it mitigated too, because but now we were going like this: higher highs, higher lows, higher highs. And now if this high was to be trusted, it has to do this.
Mm-hmm.
It has to break this structure, but it did not. You see that?
Mm-hmm.
It came back down and then it started going back higher once again, which means now we know that price has not really mitigated out of their position. They have not fulfilled intentions yet. Okay, even though the major trap was right here, it took that out. It gave a slight reaction. Yeah, a 30 pip reaction. Price has to break this structure, right? If it really mitigated the order block, it has to break structure right
Mm-hmm.
here. So now we know this. Now this is a what do we call an uptrend. Okay, you're going
Yeah.
higher highs, higher lows, higher highs, higher lows. And then what the breakout traders would do is, like, the first thing you need to do is you must think like a market maker and like a retailer.
Mm-hmm.
Okay, then you'll know where, like, as a retailer you will know what highs and lows you would trust, and then as a market maker you know, like, why should I take them out.
Mm-hmm.
Okay, so now this high right here, now the breakout traders, what they would do is place their buy stops above this. You agree with that? Because
Yeah, for
because this is
sure.
an uptrend. This is an uptrend. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So price has not broken a higher low yet. So the breakout traders would do, what they would do is they'll place their buy stops above this.
Mm-hmm.
Okay. Now what price this is? Now this has become the inducement. This has become the trap. And even smart money traders, what they would do is they'll wait to sell from this order block because it mitigated the 4-hour order block and gave a good reaction. So they'll look at this. You get that?
Mm-hmm.
They look at this order block to sell from once again because it mitigated the 4-hour order block and then it came back down heavily.
Mm-hmm.
Okay, so now this has become a trap, this whole thing. So now what they do is they'll go back up and then activate all of the buy stops and do all of them,
Mm-hmm.
and then it broke structure.
So it
Okay.
counts as a break of structure even if it
Yeah,
just does the wick.
yeah. Now the thing is, now on the 15-minute this is just a week. Okay,
Mm-hmm.
but on the 1 minute there will be a candle closing below this, right? For sure.
Yeah. Yeah.
So we have to take that as a break of structure because price went below this price. Okay, price went below 39350.
Mm-hmm.
Okay, at some point a 1 minute candle closed below 39350, which means it's a break of structure. Okay,
Okay.
so like I told you, now we have a new range. Okay, now we have a new range from this high to this low or this low. Okay,
Mm-hmm.
so once a new range has been created, what do we look for? Where is the trap? Okay, where is the trap? So we mark for discount and premium prices, and then anything above this would be a good place to sell from.
Mm-hmm.
So now, where is the trap? You see this high?
Yeah, that's the trap.
A clear order block. You see that? A very clear order block. Okay. Now, like if it is to hold, okay, if it is to hold, it has to do something significant. Okay. You see, it came out of nowhere. Why did they do it? To trap people. Like it came out of nowhere. Okay, out of nowhere. Now you see now smart money traders, what they would do is they'll sell from this order block, because the thing is, now even the people who uses liquidity and inducement, even they get trapped if they don't know what the real trap is. You see, we have a resistance of something of that formed right here.
Mm-hmm.
You see that?
Mm-hmm.
Now even I would think, okay, this would hold, but if I go back, if I zoom back down and see, like, you can clearly see this is a trap, right? Because like a very clear order block.
Mm-hmm.
Now, if they know that there are smart money traders who uses these concepts, why would they make it that easy for them, right? Think of it like that. They have
Yeah.
no reason to do that. So now we've identified the trap. So anything above this would be my POI.
Mm-hmm.
Okay, anything above this would be my POI. So, so I'm sorry I can't go for the 1 minute. I don't think they let me go this far.
To the
Okay, I'll just tell
one.
you what happened.
Ah,
Okay,
okay. Ah,
okay. So
yeah.
what happened was price came higher highs, higher lows, higher highs, higher lows, higher highs, and then broke structure right here. Broke this structure right here. Okay. And then now what we would see is the trap is over here. Okay. The trap is over here. So this high would be the trap. Okay. Now on the 1 minute, there was something like, you see this major break of structure right here that happened. So on the 1 minute, there was an order block. Like you see this whole push down within this range, there will be a lot of order blocks, right?
Yeah.
On the 1 minute, there will be a lot of order blocks all over the place. So now we know the inducement is right here. So we go for the closest order block, like the closest one. So on the 1 minute, there was a push up before breaking this structure. Okay, because this is the major structure that has to be broken. Okay, so on this area right here, there was an order block. Yeah, right here. There was an order block, and after that push up was when the real momentum came into the market. Okay, the real bearish momentum came into the market after this. Okay, that is the order block that broke this structure on the 1 minute.
Yeah. Okay. Is it possible? Because I know if you make it like a free account, you can get like 30 days. Do you want me to make
a 30 days try? No, that's fine.
Because
I'll just break this out. Because I have a private channel where I put like I'll add you to that.
Oh, okay.
And then I'll just surely put this for you. Okay. Because I thought of getting a premium account this night. So I'll just break this down and put it for you.
Okay.
Oh, I must have this. I think so, because I did this back testing and then I saw this. But I took this trade. But what I do is like I'll take the trade and then I'll write the logic behind it in the night. I'll see why it played out and all those. So now you see how price took out that, and then you see that accuracy. Like when you take the right entry, it does not stay there. Okay.
Yeah.
It does not stay. It has no reason. Yeah. The internal range liquidity has been taken out now. Now they have no reason to stay in this range once again. So it just drops. It just drops heavily.
And you wouldn't think it would go to like, so I'm just saying like, this is my thought process. So I'm wondering why, from you, I would think like this 15-minute order block, they'll want to go into.
But the thing is, this was the inducement. Okay. Like I told you,
it's too
we must choose it's too high because people would place buy stops here, and if it goes higher, that's like that's like 9 pips, but still they would be in profit, right?
Yeah.
Like I told you, choose the one that is very close to the inducement. Okay. Now we know. So if you take the sell from here, take sell from right here, what would we target? What would we target? Okay. So now we know this happened. Okay. We know the intentions of this range has been fulfilled. Okay. Internal range liquidity has been taken out and they tapped into a 4-hour order block.
Yeah.
Okay. And it even broke structure. So now we know internal range liquidity has been taken out. Now, where is price heading to? External range liquidity. Right here. See that? So now if you take the sell from up there, this is what we target.
So the reason why we're now taking the external range liquidity is because it's taken out all the internal range.
Yeah, it has taken out all the internal range.
Okay.
So now it's coming back for the external range.
Yeah, and because we're in a downtrend, that's why we're going for the external range below. Okay.
External range. Yeah. So and the next thing is, I told you this. On the base of the wick, and the 50% there.
I can't. It started to become fuzzy for a sec, but I think it's better now.
Okay. So like I told you, there is always an order block on the 50% and on the base of the wick. Okay. So now,
sorry, bro. It's like crackling. I don't know what's happening.
Is it clear now?
Talk now.
So is it clear now?
Oh yeah, that's much better. Yeah.
Okay. So I told you, there is always an order block on the base of the wick and on the 50% of the wick.
Yeah.
Okay. So now what happened was this. you see the base of this candle, okay, the base of this wick has been mitigated by this candle, by this wick. Okay, so
Yeah.
now where would the next one be? Where would the next one be?
50%.
For the 50%, somewhere around here. Okay, and then now you see this was the major trap within the range. Okay, but this push down never fulfilled the intentions. Even though it took out liquidity from this low, the major trap, it did not fulfill, it did not even fill this imbalance. You see that? And
Mm-hmm.
now the money is no more here, the money is here,
Yeah, for
right here.
sure.
Okay, so now what they do is it comes back down, and then boom, you see it taps into where the order flow was. Now
Mm-hmm.
we know they have no reason to go back down lower. Okay, because all of the internal range liquidity from this low to this high has been taken out now,
And
and
then,
now they've, yeah,
sorry,
what is it?
sorry, no, no, I think I'm jumping ahead. Sorry.
No, it's okay,
Just
just
getting
tell me.
started.
Yeah, so you see that
Mm-hmm.
the 50% of this,
Yeah.
and then price now what is the inducement, what induced this POI, this liquidity?
Mm-hmm.
You see that now this is our inducement, this is the inducement, because you see this price is coming in a bearish counter trend, lower lows, lower highs, and then this became the lower, I'm sorry, lower highs, lower lows, lower highs, and now this is where the external range liquidity is, right? So now the people who did not have the higher time frame perspective in mind, what they would do is they will place their sell stop below this,
Mm-hmm.
because they think now this is a downtrend. Now they'll think this is a bearish market, so they'll place their sell stop below it. Now what the price did was it came back down and then took out these lows.
Mm-hmm.
Okay, took out these lows and then mitigated out of their losing position right here. Okay, you
Mm-hmm.
see that it took out these lows and this became the inducement now, and then it tapped into the 50% and then broke minor structure. Okay, it broke minor structure right
Mm-hmm.
here, right here. But now what we should know is that until this the you see price went like this, lower highs, lower lows, lower highs, and this is a swing point, this is a swing lower high.
Mm-hmm.
Okay, and then price came back down, lower lows.
Mm-hmm.
Okay, took out this trend, made a new lower low. So now until this high has been taken out,
Yeah.
until this high has been taken out, we're still bearish,
Mm-hmm.
right? We're still bearish. So the thing is, now on the 15-minute or the 30, on the 30-minute time frame, we see a break of structure, a break of a very major structure, right? On the 30-minute.
Yeah.
Okay, so now once a break of structure happens, I told you we determine the new range from this low to this high. Okay, now that is our range, you agree with me? Because we
Yeah.
broke structure, it was a bullish break of structure, so then we're looking for buys. Okay, because now the bullish intent is in the market because it broke structure. So now with every retracement, we're looking to buy.
Mhm.
Okay.
So I guess the thing I get, that's why I always get confused with like which kind of range are you meant to be getting, like
Oh yeah,
using, because we were using like the 4 hour and then we went now to the
yeah.
30. Yeah.
Yeah, there's like every time frame has its own range.
Yeah.
Okay, everything has its own range, and then every range has its own premium and discount prices.
Yeah.
So all of them is important, not only the 4 hour, not only the daily, and not only the weekly. All of them is important.
Okay.
Okay, so now it came back down, took out liquidity from this low, tapped into an order block, and then broke structure, which means I told you, if it does a manipulation and breaks structure, that low is a strong low, right?
Yeah.
That low is a strong low and it is said to hold. So now we know that this low is a strong low right here.
Yeah.
So now what we would do is we would look out for the discount and premium prices once
Mhm.
again. So So now I know anything above this would be my, this is my equilibrium, and anything below this would be my discount price. Okay.
Mhm.
Now, where is the liquidity at within this range? Okay. All of these lows, this
Mhm.
low, this low, and then you see clear order blocks.
Mhm.
You see this clear order blocks. All of them act as liquidity. Okay. And then when we are in the 30-minute time frame, and on the 5-minute time frame, this is also pushed down, right? Like
Mhm.
I told you,
Yeah.
it has to make sense. This has to make sense. Why did this come down lower? Like if it's coming back down lower, it has to either fill an imbalance or mitigate something.
Mhm.
And then this was this was NFP. This was FOMC. Okay,
Mhm.
this was FOMC. So now what price did was it went back up and then came back down. Okay, I told you it
Mhm.
broke structure and then came back down and then broke structure once again right here. Okay,
Mhm.
then where would they place the stop losses and the sell stops? Below
Mhm.
this. Okay, you see that?
Yeah.
Below this would be where they place their sell stops and so. So now I do not look at any of them, not like any of them. Okay, because there is no inducement. There is no inducement. So what I would do is, you see, I told you this. There is a clear order block right here,
Yeah.
right? This will act as liquidity. So you see how it got taken out and then tapped into this.
Mhm.
You see, it gave a
Yeah.
good reaction from it.
My eyes were looking there before you were saying
Yeah.
it.
So then now we know. Now what I would do is this area would be my only area of interest. This area right here. I'll wait for price to get into that because I know that's the extreme and all those. You see that? You
Yeah.
see that?
And
So now,
you see how you didn't, is that like you are using the order block there or you're just using the wicks where you highlighted
oh,
now?
okay, I'll show you why.
Sure.
This thing was price opened right here.
Yeah.
Okay, and this is the last push down, right? This
Mm-hmm.
is the last push down before the push up. But like I told you, this wick still has some selling pressure that was not mitigated,
Mm-hmm.
right? So that's the reason I'm using this whole range from
Okay,
this
sure.
bearish candle to the low of this bullish candle.
Yeah.
Okay,
Okay. Yeah, sure, sure.
so now you see price took out that same scenario that happened on the daily. Okay, you see this
Mm-hmm.
took out the major trap, but did it actually mitigate? No, you see, it did not mitigate out of their loss or something. Okay, so then, and if this low is to hold, it has to break this structure right here, right?
Mm-hmm.
Now this becomes a weak low. Okay, this becomes a weak low now. Now what I saw is this. Now I know if price taps into this order block, like we can even refine it down to that wick right here.
Mm-hmm.
Okay, now I know once price steps into this order block, the intentions of the range has been fulfilled. Right? You agree?
Yes, for sure.
Yeah, because now they've taken out the major traps, they've taken out the major liquidity. Now the only thing they have to do is mitigate out of their loss and then go back higher.
Mm-hmm.
Okay, and then go, because now on this time frame, this is the low and this is the high, and then it comes back in to get the internal range liquidity, and then after that's fulfilled, where would they go next? External range liquidity.
Mm-hmm.
See that?
Yeah.
External range liquidity price, like it went up, created this new range from this low to this high, and then it came back down for the internal range liquidity, and then boom, it went higher just to take the external range liquidity. Okay, you
Wow.
see how, you see what price did? It took out this high, and you see immediately it started coming back down because now the buy stops have been activated
Mm-hmm.
right here. So now they activate that, and now they do not want them to profit. So it's coming back down. You see that?
Mm-hmm.
So what I did was this. Now the fun begins.
Yeah.
So I saw this. Price was coming like this. Lower lows, sorry, lower highs, lower lows, lower highs, lower lows, breakout structure. See that?
Mm-hmm.
Broke structure right there. Okay, it broke structure right there. And then I told you, once a new range has been created, what we look for is where the most amount of liquidity is. So this area I wasn't looking at this because I was asleep, I guess. So now where is the liquidity? That is what we ask. Okay, you see this price went higher, came back down, and then went higher, came back down into this breaker right here. Okay, into this breaker, and
So
then
how do you
came
know?
back down.
Sorry, how do you
I'm
know
sorry.
it'll go to the breaker and not the order block below it?
Okay, now the thing is the first mitigation into the breaker would be an inducement or the trap. Okay, now
Okay.
this is a trap. If
Okay.
price came back down, if price came back down, I'll look at this. I'll not look at this something over here. I'll look something below this. If it mitigates the breaker, it always is an inducement. Always means like my back testing told me that it is an inducement.
Mhm.
Okay, so now price went. Now we can see order flow. Took out liquidity and then came back down here, mitigated, went higher, came back down, mitigated the breaker, went back up, and then came back down, filled this imbalance. Okay, now we see order flow.
Mhm.
Okay, we see order flow. And now many people would view this order block, right,
Mhm.
as a good place to buy. Okay, that's how they would see this thing. So for me, because you know why, because I told you clear order blocks are always traps.
Mhm.
Okay, because the newbies would, they'll see, okay, there's an order block, I'm gonna risk my money on that. That's how they view it. They learn what order blocks are, and then they'll see this. See, it has some imbalance. It has some imbalance. Okay,
Yeah.
it took out these lows, and they have all the confirmations. Okay, they have all the fake things to why they can take this as a good order block.
Mhm.
Okay, it even filled this imbalance. So now we know that this is a pool of liquidity there. Okay, we look for something, anything below it. Okay, so I was asleep at this time. So you see that this created equal, some, like we see this as equal lows, but actually this candle took out that candle's low.
Mhm.
Okay, this candle, you see the low of this candle, the
Yeah.
low of this candle is 37456, and the low of this candle, no, it's actually, it looks like equal lows, but it took out, you see this, you see this
Yeah.
wick,
Just took it out.
finely wick, yeah, so we can take that as a manipulation.
Mhm.
Okay, and then price took out, which means price took out internal range liquidity once again. Okay, and then it broke the structure. Okay, it broke structure right here. Now where is the liquidity at? Okay, now where is order flow at? Okay, so you see this price took out this low and then went higher, retraced into this, and now the money is here within this order block.
Mhm.
You see that? So you understand why, right?
Why it's there?
No, like you understand why, like why I told you this came back down, and why I told you the order flow was present was because it came back down and mitigated this.
Yeah.
Okay, so now what we would see is, now what would make this a strong order block is this. You see this price came back down and it created equal lows. You see that
Would
equal
didn't
lows?
wouldn't you say that's breaking it?
I'm sorry.
Wouldn't you say
Yeah,
that's
it did. It did.
taking the
It did.
liquid?
But I'll tell you. Okay. Now let's look at this as equal lows.
Okay.
Okay. Now what price does is it comes back down, and the thing we should pay attention to is that this was the start of the Asian session.
Mhm.
So Asian session started right here, right here. Asia started right here. Okay, and now London will most probably, the London Open will most probably mitigate into an order block that was created during New York. Okay, that's how it goes. Most probably it
Sorry,
will
what
mitigate.
was that again? I just want to write that down.
Okay. London Open most probably will mitigate into an order block that was created during New York. Okay.
Sure. Thank you.
Okay. Okay. So now you see this is New York session. Now from my time this is New York. Okay, this is New York session. So now, and we see this equal lows. Okay, we see this equal lows. You see how price gave us a reaction. It
Mhm.
came down. You see, it came down to that low and then it went back up once again. Now support and resistance traders are induced. They think this low would hold, right? Now by support, they do not draw just a single line like this. They'll take this whole thing.
Area. Yeah.
Yeah, that's how. Or else they'll think this is a good supply zone.
Mhm.
Okay, but what we should realize is this: we know that it will be taken out. Okay,
Mhm.
it will be taken out. So I was a bit impatient, and then I did this. I did not wait for this. Okay, I did not want this to get mitigated. I told you it's like too far down. I looked at this imbalance from this low to this high. So my entry was here and my stop loss was here.
Mhm.
Okay, and then you see what price did. It came, it tapped, yeah?
Mhm.
It tapped right here. But what I did not consider is time and price. Okay, this was like 20 minutes before London Open. Okay,
Mhm.
and what we should know is that London Open always comes with a manipulation. Okay, London Open is always a manipulation. It does some sort of manipulation. So even I was trapped right here.
Mhm.
I bought too early. Okay, and then I quickly realized that this this low is a strong low. Why?
Mhm.
Because it took out liquidity from this low and then broke structure. Okay, so I know that price, even though I got stopped out, I know that price cannot go below this. Okay,
Mhm.
price cannot go below this. It has no reason to. Okay, because there is order flow present and this is where the money is.
Mhm.
Okay, and the next thing we need to take into consideration is this is a clear order block, right, with
Mhm.
imbalance.
Yeah.
So I told you clear order blocks will be taken out at least by a week, because the reason is because smart money traders, they love to do these small tight stop losses.
Yeah.
Okay, so this is what they would do
Yeah. That's
right on the low.
exactly what I was thinking to do.
Yeah, so now I'll look at anything below this. Okay, like
Mhm.
once price just wicket, I'll enter with my stop loss below this, because
Mhm.
there is no clear order block below this, right? There's
Yeah.
nothing clear. So what I would do is I'll wait for price to take this out. Sure, if this plays out, it plays out, no big deal. So what, like according to my back testing, I know that this will be taken out. Okay,
Mhm.
so what I would do is there, this is what I did. Okay, this is being taken out now. So what I did was, once price went below, now I know this is a strong low, it has to hold because it took out liquidity and then broke structure. Once price came down here, I bought right here with the manipulation,
So you
and
were
then my
just
stop loss
waiting
was
for
below
it to
this.
go under,
Yeah, I
and
was
as soon
waiting
as
for
it,
it to go below it.
and then you
That's
just
all I was
entered
waiting
manually.
for. Yeah, manually. That's it. And then now I know we were in the most like intentions of that whole range has been completed. From this low to this high, the intentions of the range has been completed, and this was where the last what do you call, the last area of order flow was right here.
Mhm.
And then internal range liquidity has been taken out. The next target would be this,
External.
easy, external range liquidity. You get that?
Mm-hmm.
So my buy is still running from here. That's a 1 to 95 so far.
Mm-hmm.
Okay, and then what my next target would be this, but I'll monitor price action along the way. Now I know even within this whole range right here, from this low to this high. Okay, can you give me a minute? My dad is calling me.
Yeah, yeah, for sure,
Give me
man.
just
For
one
sure.
minute. Okay,
Yeah, yeah, no worries.
1 minute. Okay, hello, bro. Can you hear me?
Hey, yeah, yeah, I can hear
Yeah,
you.
yeah. Okay. So now from this low to this high was our range, and now we know even the uh, like the intentions of this range has been fulfilled. Okay.
Mm-hmm.
Now the thing is, what do you call the higher time frame? Oh, this is the daily low highs, high lows, high highs. Okay, the
Mm-hmm.
daily is bullish. Okay, and
Yeah.
now the short term structure has also turned bullish, which means now the pullback is over because it broke structure right here.
Mm-hmm.
Okay, but the thing is, I will always wait until this high has been taken out to consider this as bullish.
Yeah.
Okay, because this is the swing point. So I'll monitor price along the way. But what I see is the intentions of this range has been completed. So now it has no reason to come back down. Okay, so now this buy, I'll target these highs, external range liquidity. You see
Mhm.
that?
Yeah.
This is
Yeah.
what I would target. Because now it makes sense, right? Like why I do that?
Yeah. Yeah.
Yeah. So that's like a 1 to 330 if it runs.
Yeah.
Because honestly, I did not risk 1%, and I don't do that because risking 1% on 1.5 pips, that's just a dumb thing to do because the spreads will open up and you'll be taken out for sure. So
Yeah.
I do not.
I was gonna ask you about that. With if for example, like I'm not taking it that far. I'm just trying to target
Okay.
like 5R or something
Okay.
like that. It's fine to
Okay.
risk 1%.
Yeah, that's fine if you're risking. But the thing is, I'm telling you, if your account size is like, imagine you're trading on a 100K FTM account, and
Yeah.
if you're risking 1%, that's $1,000. So would you risk $1,000 on 2 pips? That's a dumb thing to do, because
Okay.
if it just wicks below that, and if it goes your direction, your psychology will be so screwed because it just wicked and then went. You lost $1,000, but price is going in your direction, right? So that's not really a good thing to do, risking 1% on that. But if your stop is around, because spreads can always open up, you would have seen that
Yeah.
spreads will always open up when you put a tight stop loss and a big lot size. Spreads will open up because the brokers will capitalize from your stop loss. So if it's a 3 pip stop loss, like there's a limit of manipulation the brokers can do. So if it's 3 pips or 2.522 to 2.503, that's safe. That's safe to do 1%. But this was a 1.6 pip stop loss on MetaTrader,
Mhm.
so I wouldn't risk 1% anyway. So then my next target would be this high, and then I'll monitor if price comes back in here and then gives a bearish breakout structure. I know that this low will be taken out now, so I'll monitor price action. And if a breakout structure happens around this area, I'm gonna close at least 80% of the volume from this, because for sure this low will be taken out then. So till then, this is what I target. Okay, this is what I target. And now
Sorry,
let's
can
get
you say that again? So once that external range gets taken out,
which one? This one
yeah,
or
yeah.
this?
No, that one you were before.
This
Yeah,
one.
yeah,
This
this
one.
one.
Okay.
You said that the bottom will get taken out.
Now I'm telling you, if price comes back into this order block right here,
Yeah.
okay, and if price shows us signs of bearishness
Ah,
after
yeah,
mitigating this low will be taken out because this
yeah,
is the lower
yeah,
high
yeah.
and this is the
Gotcha,
lower
gotcha.
low.
Yeah,
Yeah, if it comes back here, this low will be taken out.
yeah. Sorry, I
Okay.
heard something else and it confused me. Yeah, that's right.
Okay. So that's what I would do.
Mhm.
So I hope I make sense for all these things,
Yeah,
like
it,
the
it
stuff I
does
taught
make
you so far.
sense. Yeah,
Yeah.
it makes sense, but I definitely got to look at it more. Like I understand. So it's funny, like the induction and that kind
Yeah.
of thing.
Yes.
That part I feel like more confident in because that's what I use now.
Use now.
Um,
Yeah.
but the defining the range and then like the external
Yeah.
range liquid,
Liquidity.
that's the
It's
hardest
simple.
part
It's
for me.
simple. Yeah. Liquidity is not necessarily equal lows or equal highs. You see, order blocks act as liquidity too, and I gave you the reason why.
Yeah, yeah, no, that's fine.
Yeah.
I mean more um, like you know how you've got your like how you define the range,
Range and stuff.
and then the
Yeah.
external range and stuff. Yeah, I find it hard when going from like time frame to time
Time
frame,
frame to
knowing
time frame.
which
Yeah.
one to get. That's
Just
my
if you do this dots like thing, you will never get lost. That is what I
yeah,
do. You see
yeah,
that? Yeah. So that's the ones that I do. So basically what I do is this: once a breakout structure happens, I'll look out for the new range and I'll see where the most amount of liquidity is, and then I'll look for a POI above or below it. That's what I do. Okay, that's basically what I do all the time. And now you know how to do ping pong, because you know once a major high has been taken out, there needs to be a pullback. So which means you can sell and then buy back up. And then you look for a major high to be taken out, and then you'll sell and then you buy back up. Then you can capitalize from all the moves, from sells to buys and everything. You get
Yeah,
that?
yeah.
Okay. So what else should I tell you? What else can I
Um,
teach you?
so some things that I was, oh yeah. So I saw that you do like a lot of your trades during Killzone, London
Yeah.
Killzone.
Kill zones. Yeah.
So for me, because of my time zone,
Yeah.
for me, I love to just trade London. And
London.
yeah, do you think it's like possible to always catch a trade in the London Open?
Yeah, it's always possible. I'll show you. I'll show
Yeah,
you.
because I'd love
I'll
to
show
be
you
able
one.
to like, do the
Yeah.
2 hour London, get my trade, and then be done.
Be done. Okay.
Yeah,
I'll show you
then
how.
gonna
I'll show
have
you how.
dinner
Yes.
and all this.
Okay. 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 So this was on 6th of July. Okay. Awesome. 6th, and then Asia, and then comes some. Okay. Can you just give me 1 minute? I'll turn on the lights and come. Just give
Yeah,
me 1 minute. It's getting dark in here.
yeah, for sure, bro.
Give me Yo, bro.
Hey, man.
Sorry. I took some time because it's raining outside and I had to take my clothes in. I'm really sorry.
No, all good, bro. It's pouring in
Okay.
Sydney as well right now.
Yeah, it's raining very hard.
Um,
So I'll show you. Like you wanted to take a trade during London Open and then just stay out, right?
yeah, I love to be able to catch like, so for the
Okay.
what I'm doing now at the moment
Yeah.
is like I do 3R, I partial, and then
Okay.
5R, I close my full
Close.
TP. Just
And
because
that's it.
yeah, that's it. But that's just because I wasn't confident with like my directional bias,
Directional bias.
and
So
because I have like
like
small stop losses, I knew
stop
that I
losses.
can
Yeah.
get that type of RR.
Ah, yeah.
Yeah.
Now price is fractal, bro. So even on the 1 minute, I do the same thing
Hmm.
before an entry. I'll do the same thing, same exact thing I told you. Now, say we were right here, okay, on the 4 hour, okay.
Hmm.
Now, now you know this is the lower low, lower highs, lower lows. But you see, if we did not mark out those dots and anything,
Hmm.
you'll think this is bearish, right? You
Yeah.
don't know what has happened on the higher time frame. Like
Hmm.
even though we are intraday traders, we need to know what has happened, right?
Hmm.
Because we're always we get lost. So now what I saw is this. Now I like you must have all of those high time frame perspectives in mind,
Hmm.
and then I see this breakout structure. So I'll tell you this: always take the 30-minute range for intraday trades. That's the most clear thing. But you must have the high time frame perspective in mind.
Okay.
Okay,
Always take 30-minute range
30-minute
for
range.
intraday.
Okay,
Hmm.
okay. So now from this low to this high is our PO. Sorry, is our range.
Hmm.
Okay. So now anything below this would be a discount prices. Anything below this. Okay. And now we drop down to 15-minute. We drop down to 15 and we can see this. Okay. Say you want to trade London and you want to go up. Okay, fine. Now we see this. Price went up, came back down, and then went back up and then came back down. Now our new range is this from this high to this low because it came back down. And for sure, this is I'm sure you this question came into your mind. Inducement.
Sorry.
Yes, it is an inducement.
Sorry. The
Okay.
internet dropped out for a sec. What you said? This question
Okay.
came
Okay.
into my
Okay.
mind.
Yeah. So now I told you the range is from this high
Hmm.
to this low
Hmm.
down here because price went up, came back down, and then went back up and then came back down.
Hmm.
Okay, so lower highs, lower lows, lower highs, lower lows. So this would have come to your mind. Isn't this an inducement? Because what did it do? What did it do? Nothing specific, right?
Yeah.
It came back inside this reclaimed block. Okay, it came into that reclaimed block, but I see this as an inducement because it has to do something like very specific on this left side of the chart, right? It did not even feel this imbalance properly.
Yeah.
You see
So
that?
it's an
So then
inducement.
inducement exactly,
Yeah.
and then even this high itself become it becomes an inducement, and we can expect a pullback from this range. I don't know, but maybe we can expect a pullback from this range, right? This week I told you the week always has an order block,
Yeah.
and the
Okay.
imbalance gets filled right here.
Yeah. Okay. I
So
think I'm
yeah,
realizing that it's not even like, of course, order blocks are important, but it's
oh
more where the
yeah,
induction is, whatever's
exactly.
closest. That's why you don't have to
Because
worry about that order block next to it.
next, yes, because for an order block to work, there always needs to be liquidity fed into the POI.
Hmm.
Okay,
Yeah.
liquidity has to be fed into the POI because that is the reason why they should do it.
Hmm.
Okay, so and the next thing is yeah, we can expect a pullback after this because this is a major high now
Yeah.
because it acted as lower highs, lower lows, and lower highs.
Hmm.
Okay, now this is acting as a major high. So once this is taken out, we can expect a pullback from this range, a very little pullback. But we need to monitor how price is coming back up. Like if it's coming back down in a very corrective manner like this, we can be sure that this will work. This POI would work.
Hmm.
But if price comes with a huge momentum, like a huge bullish momentum, we do not want to jump in front of a raging bull, right? So
No.
it will just wake you up. So just look at momentum. But there are times price will come back up and then like, it will come back up fast and then it will drop back down.
Mm-hmm.
There are times like that, but that's high risk.
Mm-hmm.
So okay, now what we expect is this. I told you after every major low or high has been taken out, there will be a pullback. Okay. Now you see this was a trap. This clear order block. This here was a trap. Okay. And then price came back down, mitigated something over here, and then go to the 5 minute. We were coming back down I told you, accumulation always comes in a bearish counter trend.
Mm-hmm.
Okay, in a bearish counter trend. So you see how price went. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then it broke this structure right here. No, right here. It broke structure, right?
Mm-hmm.
Now we know that this is our new range from this high to this low. Okay, and
Mm-hmm.
once this counter trend gets broken, we know the pullback is going to start. Okay, so I came into the market this day. I came into the charts, and the first thing I noticed was this breakout structure
Mm-hmm.
right here. Okay, this breakout structure, or else this was just a week. But I told you why I chose the week. But then again, this was the 5 minute. Okay, then there there's no chance of being there's no chance of candles being above this wick because it's a 5 minute,
Mm-hmm.
right? You get what I'm telling, because
Yeah.
the lowest are the seconds and those stuff. So let's take this as the breakout structure. Sorry, let's take this as the breakout structure.
Yeah.
Now once a breakout structure happens, what do we expect? A pullback.
Mm-hmm.
This is the range. Now the new range from this low to this high, or this high.
Mm-hmm.
You see that? Now
Mm-hmm.
price has to come. I'm sorry.
That's all right.
Price has to come inside of a discount price.
Yes.
Okay, to go back up. You see how fractal price is now.
Oh yeah, for
And
sure.
I told you this is the Asian range.
Mm-hmm.
For me, the Asian range starts at 2:30 a.m. then ends at 9:30 a.m. right here.
Mm-hmm.
Now this is the Asian range. And what you should know is that Asian range itself is an inducement. Okay,
Yeah.
because the Asian range is accumulating, all of those stuff.
Mm-hmm.
So what I told you is this. I told you pullbacks come. Okay, pullbacks come once a major high or low has been taken out.
Mm-hmm.
Okay, so now you see how price came back down. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Okay, now right here, you see this high.
Mm-hmm.
Okay, you see this high right here.
Mm-hmm.
Now it mitigated this. Okay, cool, cool. Now this is a good, like, this makes sense, right? This move, because it came and mitigated this.
Yeah. Yeah. And it
But
built
this,
liquidity to take it.
yeah, this went higher. This went higher. But did it really feel the imbalance?
Nah.
No. You see that?
Yeah.
It did not feel the imbalance. So, and then now you see what the inducement is. This is the inducement. Okay. This becomes the inducement now, because I told you this is a major high now on the 1 minute time frame. It comes lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. It goes like that. Okay. And now I told you, after a major trap has been broken, we can expect a pullback. You get that?
Yeah.
You get why this is a major high, because it once acted as a strong high when the price was bearish.
Yeah.
Okay, so now we can expect, as soon as this has been taken out, we can expect a pullback.
Mm-hmm.
So I did that. I sold from here. Okay, I sold from here. Sorry, I had a session earlier and now my voice has gone.
No worries.
Okay, you see that?
Mhm,
Okay. Now what I do is this. I told you this is the inducement now. This is the trap.
mhm.
Okay. This is the trap.
Yeah,
This
and
is
how
the
high
trap.
would you put your, so you put the stop loss at that, which area?
Yeah, on this.
Okay.
On this for sure. Yeah. Now we know what the trap is. This right here.
Mhm,
38137. Yeah. That is a trap.
mhm.
Okay, now like you know why I call this the trap, right? It did not
Yeah.
do anything significant. Like if it really came back up and then completed this imbalance, okay, we would have trusted this, but it did not do that. Okay, so now until this trap is been taken out, we can trade because
Mhm,
we know the intentions, right?
mhm.
So this is what I did. This whole day, this is what I did. So I came to the markets right here. I'm sorry.
That's all right. Do you have a drink of water?
No, that's fine. That's fine.
Are you sure? I'm happy if you want to
Yeah,
go
yeah,
and
that's
get one.
okay. No,
Okay.
that's okay. Okay. So I came to the market when this was happening.
Mhm,
Right here. This is where I came to the market. And then I've marked out all of those breakout structures and everything. And then the next thing I see is this. Price took out liquidity.
mhm,
You see? Equal lows, and then boom, took out liquidity.
mhm,
And then mitigated into this imbalance right here.
mhm.
Okay, it mitigated this imbalance. And then what price did was it came back down, and then on the seconds time frame, this right here was a breakout structure.
Mhm.
Okay, this is how it came: lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, breakout structure.
Mhm.
Okay, and then this mitigated this. You
Mhm.
see that?
Mhm.
It's mitigated this, but even though it mitigate, like that's why I always say you need to always build the story behind the trade. You need to build a narrative.
Mhm.
Okay, you need to build a narrative. Now look at this. Okay, now where did the real bullish momentum come from? Okay, like within this whole range, where did the bullish momentum come from? You see this right here. You see the push up after that. It is strong more. It is stronger than this. You see that this
Yeah.
push up,
Yeah.
and why we do not choose this order block is this. Where is the inducement?
It's
There is no
closer to
inducement.
there. Yeah.
Yeah, there is no inducement. But you see all of these stacked lows and all these price action,
Mhm.
sideways price action,
Yeah.
because now the triangle traders would see it like this. That's so dumb. It has no reason. Okay,
Yeah.
they'll see
Could
this and all of these imaginary patterns.
could
So
I
now we
ask
know.
something very quick?
Yeah, sure.
I think I'm jumping ahead, but I just I just wanted to see. So if we were to maybe take a trade, we would look
Yeah,
to enter like from maybe the imbalance there to somewhere here.
yeah, yeah.
The
That's
entry.
what we do. That's what I did.
Yeah.
What
Okay.
I did was right like this,
I
but this was
understand.
too small.
Yeah.
Okay, this stop loss was too small. You see, right to the people.
Oh wow. Yeah. Cool.
See that? Because the reason was the inducement. Inducement. Now, this was where the order flow was present, right? I agree.
Mm-hmm.
But where was the inducement? This. The inducement shows where they want to go. You see that? You see, like why I took this as an inducement was I told you. This, you see, this sideways price action, because this is what price wars do. It has to go up, 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 like without stopping everywhere. If it starts moving sideways, or if it started slowing and all of these weak rejections, that's something suspicious, which means the banks are stacking up orders now. Okay.
Yeah.
So what I did was I bought from here,
Oh wow.
bought from here, and then what was my target? Okay. Honestly, this 0.8 pip stop loss is not possible. So
Yeah.
mine was around 1.6 pip. And then what would I target? What would I target?
The
We
external
know where
range.
the trap is. We know where the trap is, right?
Yeah. Oh
No,
my God.
not the external range
Sorry,
liquidity.
the trap. The trap. Yeah. Yeah.
Yeah, because the external range liquidity, sorry, before going to take out the external range liquidity, we need to take out internal range liquidity, right? So
Mm-hmm.
you see, after this break, price broke structure right here,
Mm-hmm.
and a new, now still the range has not been created, because I told you price has to go up and then break structure, right?
Mm-hmm.
Because this counter trend has to break, and then once it's turned bearish, we know a pullback has started.
Mm-hmm.
Okay, so now we're still going up. Okay, so
Mm-hmm.
I hope you got that why I told that.
Yeah. Yeah.
Yeah, okay. No, you can ask me if you did not, because I can teach you all day, no worries.
Sorry, can you say it again? Just I want
Okay,
to make sure I
now,
understand.
okay, sure. So now price was coming back down like this: lower lows, lower
Yeah.
highs,
Yeah.
lows, lower highs, lower lows, breakout structure. Right here we
Mm-hmm.
broke structure. Okay, we broke structure right here, which means now we've turned bullish.
Mm-hmm.
Okay, we've turned bullish, but that bullishness is only for some time, because that bullishness is just what do you call? It's just a pullback
Or the
inside
higher
into
time
this,
frame.
yeah, into
Yeah.
this internal range liquidity within this range from this high to this low. I'm
Mm-hmm.
teaching you how to do this ping pong.
Ping pong. Yeah.
Okay, yeah, because and then I'll tell you how to get the last entry from the
Mm-hmm.
right place. Okay, so now what I would do is, it broke structure. Okay, and then I told you I would determine the range first from this low to this high.
Mm-hmm.
Okay, and then this is surely an inducement, because that's the Asian low that will be taken out. Okay, and then you see this intermediate term lows, this, you see this intermediate term low,
Yeah.
you see that? So this will also be an inducement, right? Because I told you why.
Mm-hmm.
This once acted as a strong low. It broke structure, went back down, went back up, and then came back down, and then went back higher. You
Mm-hmm.
see that?
Mm-hmm.
You see why I told that?
Yeah. Yeah.
Okay, so then this we've identified the trap. So anything below that would be a POI. We do not expect, we do not hope this will work out, this will work out, and we do not place orders everywhere. Like you see, how many order blocks are there?
Yeah.
One, two, three. There's many. Okay,
Mm-hmm.
so now anything below this, anything, and I told you this. Once it comes to the breaker, it becomes an inducement. You see, came
Yeah.
back to the breaker. It became the inducement. Okay, so now this would be a good point of interest. This right here, because let's see how many pips was there. That's 1 point, that's 2 pips.
Mm-hmm.
Okay, so then you can take this whole area just to be safe, because
Yeah.
there's just an imbalance right here.
Yeah.
Okay, so honestly I did not take this trade, so I don't know where price actually reacted from. So okay, this is where it came to, and still it's around 4.4 pips top load, not bad.
Mm-hmm.
Okay, wait, before that I'll show you this. Now if we buy from here, we know that we need to target the trap.
Mm-hmm.
Okay, we're targeting this right here, the trap. Okay, but you see this, they're doing this inducement thing again and again, because
Yeah.
li- price is fractal and liquidity is fractal too. Like even on the daily or the 4 hour or the 1 minute or the second chart, because there are traders who trade these tick charts, the 1 second chart. I don't know how
Mhm.
they do it and why they do it, but there
Yeah.
are people who does that for no reason. So even they get trapped. Okay, so
Mhm.
now even though this took out the trap, okay, even though this took out the trap,
It just
it did not
created
fill the
another trap.
imbalance.
Yeah.
Yeah, it created another trap. Okay, it created another trap. So now what we know is this: price went, came back down, broke structure. This is higher highs, higher lows, higher highs. Okay, now what we would expect is this price. Now, if it went and mitigated this, we're gonna sell it from that. Okay, if it goes and mitigates the trap,
Yeah.
we're gonna sell from that. You,
Yeah.
I gave you the reasons why.
Yeah. Yeah.
Okay, and now it did not mitigate. Okay, so we
Mhm.
know higher low, this is the higher low,
Yeah.
higher high, and then price has to come back down to the higher low, and
Mhm.
then take this inducement now into
Into
this
that. Yeah.
into this imbalance. So
Yeah. Yeah.
now this is a new range from this low to this high, would be a
Mhm.
new range, right? You agree?
Yeah. Yeah. For
Okay,
sure.
and then once again, always do these 5 things and then you're good. Discount premium, so anything below this, and now we look for where the liquidity is. Okay,
Mhm.
now what did price do? went back up, broke structure. But is this candle induced?
No.
No inducement, no inducement. Okay, but then price came back down, and then came back down once again, and then went back up, and then once again it came back down, showing order flow. Okay, I'll show you all the places where we could get trapped.
Mhm.
And once you do the back testing, you will know.
Yeah.
Yeah. So now this is order flow, right?
Mhm.
So now what would they do?
They'll definitely use it as a
You see?
trap.
You
Yeah.
see that?
Into
Now
the.
this is
Yeah.
the trap. But what is a real POI? You see, they did
There's a
not
little
really feel the
imbalance.
imbalance yet.
Yeah.
See that? Ooh. You see that? And
Mhm.
this is where the push down started, right here.
Wow.
So we can take it like that. Here. This is where the push down started. Yeah, this is hindsight. I know this is hindsight
No,
for
no,
sure, but
it's bro.
this
I'll
is how
be
we
honest.
learn.
Yeah, for sure. And I actually I trust you like 100%. I saw the MT4 stuff and like
Yeah.
yeah.
Yeah, like I
Don't
have no
worry.
reason. I have no reason to lie to.
Yeah.
Who am I gonna lie to? I have no reason to do that.
Yeah.
So and then we buy.
Mm-hmm.
So what are we targeting? We know the intentions have not been fulfilled yet.
Mm-hmm.
Okay. And then boom, once again, right here.
Oh my gosh.
Okay?
Yeah.
And then here comes this. Now the trap has been taken out
Mm-hmm.
and the imbalance has been filled.
Mm-hmm.
Now what I do is, now I'll teach you something like very, very important, super important, and this happens all the time and it can be trusted all the time. Okay.
Okay.
So do you know what a FU candle is? Okay.
When
You would
one
have
goes
heard of it.
one way and the other way.
No. A FU candle, the name speaks it all. It just fucks you up. Okay. I'm sorry to curse, use those words, but that'll be fun. You'll understand it that way. Okay. So it'll just fuck you up, honestly. So
Yeah.
now what it does is it takes out liquidity. Okay. It takes out liquidity. And then what makes it a FU candle is that this. It comes back down. It has to take out liquidity.
Mm-hmm.
And then the next candle has to engulf it. You get that?
Yeah.
The next
Sure.
candle, let's take this out. The next candle has to engulf it. You see why
Okay.
this is an FU candle now?
Yeah. It took out liquidity and then engulfed.
Liquidity. Yeah. And then the next candle has to engulf. Okay.
Mm-hmm.
The next first candle, or the next two candles, or three of the three next candles should engulf. Then we can consider it as a FU candle. You get that?
Yeah.
I hope you understood that.
Yeah. No, I definitely do, for sure.
Cool. So I'll tell that to you once again. It has to get engulfed by the first candle or the second candles or the three candles after that.
Mm-hmm.
Okay, that's because it's basically an order block. Okay, but the FU, that name is like, it just teaches a lot.
Yeah.
It tells you a lot.
Yeah.
Because that FU can, like, it FUs everyone. It FU, like, along their way they just FU everyone, like every single one. You see that? Yeah.
Mm-hmm.
Yes, and if you can right here, yeah?
Mm-hmm.
You see, it got engulfed, which means they took out these highs.
Mm-hmm.
Because which means there was liquidity right here. I don't know, some people, for some dumb people, they have sold here. That's why they get FU'd.
Yeah.
You see, with the FU candle, you know where the liquidity was. Because
Mm-hmm.
they'll do this all the time. And then price went back up, and then it took out this trap, and then tapped into the imbalance.
Mm-hmm.
Okay, it tapped into the imbalance. So now I told you about the FU candle.
Yeah.
Okay, FU candle. So now it came back up, came back down, and then boom. This was the FU candle taking out the trap into the what? Where did it go to? Into the imbalance.
Mm-hmm.
You see that? This was the imbalance that I marked.
Yeah.
Okay, the FU candle into our POI.
Mm-hmm.
You see that?
Mm-hmm.
And now you see how it got engulfed.
Yeah.
Now, if I wait for a break of structure, it has to break this, right?
Mm-hmm.
It has to break this low. If I wait for a break of structure and then return to origin.
Sorry, could I just jump in 1 sec?
Yeah, sure.
Yeah, I think how I have to really start to like view the market break of structure and stuff. So for me, I'd maybe say like something like that was break of structure going like that.
Structure,
But
yeah.
it's got to be from, is it on the 1 minute, like from here to here kind of thing?
So now the major structure on the 1 minute was this. Okay, was this lows,
Okay.
highs, higher lows, higher highs, and that's why I said we'll wait. We must wait for this to break.
Gotcha. Sure.
Okay,
Yeah.
for confirmation. You
Yeah.
get that?
Mm-hmm.
And now this is what we would expect. I told you about the FU candle.
Mm-hmm.
Okay, it took out the trap. Now you see now our analysis was just right, because why would an FU candle, like if the FU candle just FUs everyone? Okay, now it does not form everywhere. It forms only where the liquidity is. Now you see, now this is a confirmation. Our trap has been FU'd. You see that?
Yeah.
FU'd into the imbalance, and then boom, came back down. The next candle engulfed. So what I do is I do not wait for breakout structure. Now I know the intentions have been completed. So once this candle closes, I'll sell. I'll sell on the 50% without any sort of breakout structure. Right here.
Okay.
I'll sell right here.
And
Stop loss
sorry,
above this.
when would you be taking the trade? Like, would you have it instantly, your trade, like your entry here and then here? Or are you waiting for
I
confirmation?
think the stop loss was too big, but I did not take it from up here. I took the 50% because this was like 3 pips, I guess.
Okay, sure.
Yeah, 2.5 pips or something. I could have taken it, but I just waited for confirmation or something. I don't
Okay.
remember why I waited, but I did not take that sell from up there.
Yeah.
But that was my POI. Now, if I take it from up there, the Asian low would be my target. You see that?
Yeah. And why is the Asian low the target?
Yeah. I'll tell that to you. I'll
Yeah.
tell that.
I need.
But I'll do this, and then
Yeah.
I'll tell that to you about the Asian session is a super important thing. I'll tell that to you.
Yes. Sure. Sure.
Yeah. And now this would have been the first entry.
Mm-hmm.
Okay. And then my original entry was right here. 50% of the FU candle
Mm-hmm.
right here. And the next thing is time and price. Okay.
Mm-hmm.
This was, you see the time? 12:31 a.m. Sorry, p.m.
Mm-hmm.
At my time, this was exactly London Open. Exactly London Open. Okay. And price is fractal. Price is fractal. It went up, came back down, and it went back up. And then on the second time frame, this is a breakout structure, right?
Mm-hmm.
Okay. On the second, I think you get what I'm trying to say.
Yeah. Yeah. I do. And it even
Yeah.
induced into the 50%.
Yeah, right. Yeah, you're getting it. I'm happy. It went higher highs,
Mm-hmm.
higher lows, higher highs, and the price came back down and then went back up and then came back lower.
Mm-hmm.
Okay, came back lower. Now, smart money traders would think, okay, this is my POI because this is the one that caused this breakout structure.
Yeah.
Okay, that's what they would think. And then the people who sold here, they'll trail their stop loss until here because this broke structure. That's strong.
Mm-hmm.
Okay, but on the 30-second, sorry, I cannot go to the 30-second, I guess.
That's
Oh no,
okay.
I can't.
That's fine.
Okay, oh, missed it. Where were we?
Oh, it's gone on the daily. That's why.
Yeah, it's on the daily. I'm sorry.
I saw 2006 and I was thinking, what's going on?
So this is what happened. You see how time and price comes into play.
Yeah.
You see that?
Mm-hmm.
This was exactly London Open. I told you, London opens with a manipulation.
Mm-hmm.
Took out everyone because I told you, smart money traders, they want a small stop loss. What they do is like they don't like even doing this. Okay, even to be safe. Now people are being safe if they put it here. That was 4.2 p, but smart money traders, they have this big ego. They want to put it here. They want to put it here. They want to have a very tight stop loss.
Mm-hmm.
You see, FU'd once again. You see, engulfed. Here, this got engulfed.
Yeah.
FU'd. That is why it's called FU candle. You see, that's the second entry. That was my entry, right from this, and then right here
Mm-hmm.
was my stop loss. Then once again, my target was the Asian low. Okay, and now you see how price came back down.
Mhm.
It came back down, went back up. Like, pay attention to every move the price does. Okay,
Mhm.
I'm sorry. So it came back up and then came back down and then came back up. Now this right here, can you see that?
Trend line liquidity.
Trend line liquidity, which means it's inducing something.
Mhm.
It is inducing something. So what I basically do is when I see this, I mark a horizontal line from here, from where the inducement started, from here. And then
Mhm.
I'll check anything below it because I know the FU candle is coming now because all of these dumb people have bought here, right? On this trend line. So now
Yeah.
I know the FU candle is gonna come. I know it's gonna come now. So
Mhm.
what I would do is, I told you. Now you would ask, now if I tell you to choose the right POI, you tell this, okay? Because this is the only logical place.
Mhm.
But you see, I told you about the wick, the long wick.
Yeah.
This has the most amount of pressure. You see that? The
Yeah.
selling pressure is right here. And I told you, we always choose the order block closest to the inducement.
There's the
Right?
imbalance there before it.
Yeah, we have an imbalance too. So we can take this whole thing or the wick. I took the wick.
Mhm.
So, and then I know the FU candle is coming now because there's liquidity being built.
Mhm.
Boom. See that?
Mhm.
FU. Because you see, even though this was a even though this was a big bearish candle, it got engulfed, right? So this is an FU candle. You see that?
Mhm.
Okay. So now we're buying. We're buying, but where will we target? That's the question.
50%.
Now we're buying. Okay, we're buying. And now what we see is this. This was our major structure. High low, high highs, high lows, high highs. This was the real breakout structure, right?
Mhm.
You get that?
Yeah.
Price went higher lows, high highs, higher lows, high highs, breakout structure. Okay. Now our new range on the 1 minute is from this high to this low
Mhm.
because it broke structure. You get that?
Yeah.
From this high to this low. So I told you, once a new range has been created, we look for the discount like this.
Mhm.
So now I know anything above this would be my point of interest. And now, where is the liquidity? Okay, where is the liquidity? You see this clear order block?
Mhm.
See how crazy that is? You see this? They will give you exactly what you want.
Yeah.
Okay. Now think of all of this. Now everyone would have sold from here, right?
Yeah.
Everyone.
Yeah.
Okay. So now what I would do is anything above this would be my POI. Anything because I know it is gonna get FU'd.
Mhm.
I
Jeez.
know that. You see that?
Yeah.
Because the, like no one else tell you that an order block is liquidity. But I'm telling you because you can see it, right?
Yeah.
Like
Yeah.
I can't make this stuff up. And I even took all of these entries.
Mhm.
Okay. So now anything above this would be my POI. So on the 32nd, I guess there was something over here. Okay. And then my target for this buy would be the next trap.
Mhm.
Okay. Would
So
be the next trap.
with
See there?
with how like on the 1 minute, what would my entry be for the sell there?
For the sell,
Yes.
because you don't have the this thing,
I don't
seconds
have
chart.
the 30. Yeah, I didn't have that.
Okay. Easy. I told you.
Mhm.
You see this FU candle once again?
Mhm.
Boom, got engulfed.
Mhm.
Okay. I told you. It got engulfed, which means it took out the trap, it took
Mhm.
out this order block, mitigated something, and then created the FU candle.
Mhm.
50% of the FU candle. Easy.
Wait, where
See
where's
that?
the
Now, this becomes the FU candle because this is the candle that took out the liquidity and then mitigated something over here. This
so
candle right here.
so it's not the black
Not the
candle, it's the
bearish
white.
candle. Not the bearish candle. Okay. The
Okay.
buy candle because this buy up was the one that took out this liquidity.
Okay. So it's the candle
Okay.
that
Cool.
takes out the liquidity, not the
Yeah,
engulfing.
liquidity, not the engulfing candle. Okay, you see now this is a strong one, a very strong one because you see it got engulfed with one single candle. Okay,
Mm-hmm.
and then imagine we were on the 15-second time frame.
Mm-hmm.
Yes, the inducement once again.
Mm-hmm.
You see that?
Mm-hmm.
A high out of nowhere. You see that?
Mm-hmm.
That becomes the inducement, and then
So you do from wick to wick, not the body.
Yeah, wick to wick, wick to wick. Okay,
Okay.
because this wick has the most amount of volume in this candle. You see that?
Okay.
Okay, so and then 50%. Like even if you don't have the seconds time frame, you could have taken it from here,
Mm-hmm.
50%. And then your stop loss would be above this wick. And then once again, where would we target?
Mm-hmm.
This thing. This was our external range liquidity now,
Yeah.
because this was our whole range from this high to this low.
Mm-hmm.
So internal range liquidity has been taken out. We see the FU candle coming
Mm-hmm.
and then taking it down here. You see that?
Yeah. Wow.
Yeah.
This is crazy.
Yeah. And the thing is, this is not hindsight because I took all of this. I took all of this.
Yeah. Yeah.
I
sure.
even posted there. Yeah. This is not like hindsight stuff. I just took all of this.
Mm.
Okay. And then right here. And then I told you this. So now we come to the higher time frame perspective. You see that?
Mhm.
We had this breakout structure, and all of this happened with all of this was a pullback on a lower time, on a higher time frame.
Yeah.
But you saw how many times we capitalized from all of these moves?
Yeah, for sure.
Yeah. So now what we would do is this. Okay, now you see this is too big for me. Okay, honestly, this stop loss is too big for us, right?
Yeah.
Yeah. Is that 4 pips? We don't want that. See, even I have that ego thing. So now you see that FU candle coming? Boom, engulfed. One,
Mhm.
two, second candle engulfed. You see that?
Mhm.
Can you see that? Did you
Yeah.
understand what I said?
It
FU
took out the
candle
stops.
into the POI. Yeah, the
Yeah.
stops in the sense the stops that were resting over here, that intermediate term low.
Mhm.
Okay, and now we know the internal range liquidity within this, from this low to this high, has now been taken out too.
Mhm.
Okay, you get that? You get what I'm trying to say?
Yeah.
Awesome. So now that's done. Okay, now this was our whole range from this high. See, it gets crazy, from this high to this low.
Yeah. So that's on the
Okay.
higher time frame now that
Yeah,
we're
that's the
aiming
higher time
towards.
frame.
Yeah.
And then this was the 5-minute time frame. This was the breakup structure on the 5-minute.
Mhm.
Okay, we were trading this small range, this little range to the downside, and that was a pullback. Okay, and then now we know the intentions of this range from this low to this high fulfilled because the FU candle came into our POI. Okay, now say this was a like the stop loss was too big on this. Okay,
Yeah.
the stop loss was too big on this. So I told you, FU candle, you saw how it got engulfed. 1, 2. Woo.
Yeah.
So what I would do is I'll buy from here. You see that? Easy. No breakup structures. I do not wait for a breakup structure. You see that?
Yeah. So you just
And now,
take it directly off.
yeah,
Would you
directly
do
from the
50?
FU candle.
You wouldn't do 50%?
So I'll do 50%, and it depends. It depends. Like it's your preference. Like if it's 4 pips or lesser, I'll take it from the body because the best thing is not getting the sniper entry. It's
But
getting
getting-
into the trade.
Yeah.
That's the most important thing. So
Mhm.
now this was why. Okay, this right here, and then where would our targets be? Now
And then
between this whole range,
Mhm.
this range, where is the real trap at? Okay, it has to be like, obviously it has to be above the premium price.
Mhm.
Yeah, above the equilibrium. Okay, above the equilibrium. So you see anything above this premium price.
Mhm.
Okay, so then now getting into this range, and then so I'll tell this to you in the 15-minute. Okay, now this is our range. This right here is our range from this high to this low. Okay, and then anything above this would be a discount price. Okay, and then what access liquidity or inducement right here? Order block, clear order block without any sort of inducement. You see that?
Say that a bit again, sorry.
So now this was on the yeah, this was a premium price.
Mhm.
Okay, and then you see this order block, a very clear order block.
Yeah.
Now that is our trap.
Mhm. Yeah.
Because I told you why.
Mhm.
Clear order blocks cannot be trusted. Okay,
Mhm.
and let's go to the 1 minute. Oh wow, I just saw something. So now what happened was this. I told you this whole thing was a 15-minute order block,
Mhm.
and I told you that's a trap. Okay, now the 1 minute confirms it's a trap. Why? Because
The
it came
imbalance.
higher, but did it feel the imbalance?
Yeah.
No, no, it did not. So now all the other smart money traders would look at that 15-minute order block, and what are we looking at? A pip higher than that because we know they are getting a few.
Mhm.
So we're looking at this, and then this is our trap. Okay, this is our trap. This right, you see that accuracy? This is
Mhm.
our trap. Okay,
Mhm.
now we're targeting the trap. This buy from down here will be for the trap, targeting the trap. See how we're making money out of each move in the market?
Yeah,
Like every single move.
it's honestly crazy. So
It's crazy. It's crazy.
it is crazy. I was actually I wrote down a bunch of questions I wanted to ask you, and funnily enough, one of them was, do you think it's possible for me to make 10% a week?
You see this, bro? You see this? This is 11%. 7, that is 18%. And then with this, that's like 17%. And then 26%.
Yeah.
That's up to 18. So that's around 46. That's 44%. And then 58%. And then you see that you like this is enough for the whole month. Do ping pong one day, and that will be enough for the whole month. But I'm telling you, don't risk 1% on these dumb trades, like with a tiny stop loss. You see that?
Yeah.
Okay. Now, boom, sell from here. Because we know now range has been taken out. Okay. Now, where will our targets be? You see that?
Mhm.
Highs, lows, internal range liquidity has been taken out. Where's the external range liquidity? Right here.
Mhm.
So then target this. Easy. See?
Yeah. So because the okay, yeah, because the internal range liquidity was taken into our area of the buy, that's the
Bye.
that's the end of it. And then
Yeah, that's the end of it.
we don't ever have to come up any higher. So then
Any
now,
higher because why? There is
yeah,
no
there's
reason.
no
Where's the
reason.
inducement?
Yeah, yeah.
Where is the inducement within this range? Nothing has
Mhm,
been induced. Okay.
mhm.
And now once price is that's it. That's basically so how we play people.
Yeah,
See how beautiful the chart is now?
yeah, yeah.
Making money out of every single move.
Yeah,
See?
for sure.
Like so much.
Wow. But yeah, crazy. Cause
Like
yeah,
you
I
could have
love
done this. Okay.
what, sorry?
Yeah, we could do this like mostly these type of setups happen on a Wednesday because Wednesday like starts consolidating for a while. So on consolidations we can have lot of fun if you know the trap pad stuff.
Yeah,
I
yeah.
love consolidating this
I
because it
was
will consolidate and they'll give huge moves,
That's
two
what I
huge
was
moves.
thinking. So on days where it's not consolidating as much,
Yeah,
we
on
could,
days like that we can do a trade like this and they stay out of the market because it'll just expand to the downside like this
yeah.
and there'll be nothing else. And then but I'll do this too if I could not enter from up here. Like I'm stingy, you know. So I need to get in this. I
Yeah.
need I need it. So what I do is I go to I go to a second time frame and then I look for that same thing I told you. Like the same thing.
Yeah.
Okay. Now you see this high? I did this, okay? I did this. That's why I remember. You see this?
Hmm.
Clear order block. You see that?
Yeah.
So I was on the 32nd and then so anything above this was my POI.
You're
Anything
disgusting.
above that. So anything above this,
Yeah.
anything above this, because
Wow.
I know this will get FU'd. And you
Hmm.
see, why did they do FU? Because there were orders over here. I
Hmm.
said even liquidity is fractal. Took that out, boom, and then I entered here, right here. I don't even remember what the order block was. I entered right here with a 2 pip stop loss,
Hmm. Wow. So, this is going to be
right here.
such a, well, that's insane. It's going to be such a big help because one, it's going to, oh, yeah, sorry, that was another question I had. Doing this
Yeah,
type of trading, like now that I see it, I think I know the answer, but it doesn't mean you have to sacrifice your win rate at all.
Win rate. Yeah. And imagine having a 60%, like mine was the last time I checked on FTMO, mine was 72%. So imagine a 72% win rate on, like, I take around 10 trades per day. So imagine a 72% win rate. Like, that's magic. Could do
Yeah.
a lot.
Do you mind if I ask a personal question about
Yeah, no worries.
what's like what do you make like daily percentage or like weekly
So
percentage
this
roughly?
is it. I do not have a daily target, because if I have a daily target and if I could not achieve this today, my target, then tomorrow I'll be stressed. I'll think, okay, I have this much to cover for tomorrow too, and then I'll be stressed. Okay. So what I do is I'll have a weekly target. Like, for say, like, I'll have a target of $2,500 per week.
Uh-huh.
Okay.
And
And
what's
then
that for percentage?
that's around, no, 2,500 is not my target actually. I'll target around, so I'm trading 100K FTMO. Like, I don't have, like, I'm trading 100K FTMO. So
Yeah,
I'll make around 60% every month. So that's enough. 60% on
60% a month.
100K account.
Oh my gosh.
Yeah.
Wow.
Because, and the thing is, I don't even risk 1%. Okay.
Mhm,
My biggest lot size I use is 10
mhm.
standard lot size. Okay. I don't even risk 1%. Or like the maximum I'll risk is $250 from 100K. And
Wow.
because of the small stop losses, it's gonna make a huge difference, right?
Yeah.
But if I do 1%, like, I don't want to do that, because
It'll
losing
screw up your
1% will
psychology.
screw up your psychology a lot. You
Yeah.
do not want to do that. Yeah.
Yeah. If you can handle that, then it's fine, but it might be
Yeah,
too
but
hard.
I can't. Honestly, I can't do that.
Yeah. Yeah.
I'm not that strong. And then I told you this. Right? I told you this. This was an inducement.
Yeah.
Okay.
Yeah.
Let's refine it down to this. See? Today I come into this, right? And then look what price did. I just saw it. Oh, boom. You see that?
This is making me sick.
I told you, where the inducement is, it will get FU'd. I told you. You see that?
Yeah.
Saw that accuracy?
Mm-hmm.
Saw how quick the move is?
Mm-hmm.
50 pips within, wait, I'll see. 50 pips within not even 11 minutes. 11 minutes for 50 pips. And that's a 1 to 15.
Yeah. It's so crazy.
Saw that? Yeah, it's sick.
Uh,
It's really sick.
and bro, do you mind if
Yeah.
I could, is it, oh yeah, and I saw you use FXCM. Is it just,
Yeah.
I normally use Oanda, but you find
No,
FXCM
because
is,
FXCM and FTMO goes like the same. That's why I use that.
okay,
So
sure.
it's easy for that. Yeah.
Okay. Is it possible? Oh yeah, you said you were going to tell me about the Asian range, why it's important.
Yeah, I was going to tell you that. So now I'll tell you what the Asian. I don't want to delete this because it's too beautiful.
It's so beautiful.
So what the Asian session basically does is this. Okay, it consolidates.
Mhm.
Okay, it consolidates, which means the banks and the central banks and everyone, they're stacking up orders. Okay, and which means they're inducing something. Now I'm talking about a bearish situation.
Mhm.
Okay, bearish market. Price come back down like this, and then this was last day's New York. Okay, this was last day's New York. This whole thing, and then
Sure,
I'm just showing you a rough sketch. Okay,
sure.
so the Asia does this. Asia does this, which means market is accumulating. Oh, yeah, market is just gathering orders.
Mhm.
Okay, market is just gathering orders, because you see these consolidations are important because market is gathering orders.
Yeah.
Okay, which means they're stacking up orders. So what happens is this: London opens with a manipulation. I told you, right?
Mhm. Yeah.
I told you London opens with a manipulation. So what happens is this: it comes back down and then boom, London does this, the manipulation, and then the move will be quick like this. And that's why I always say I'll target for Asian lows, I take a target for Asian highs. I tell that
Mhm.
because Asian highs, lows, and the midline has the most amount of liquidity. And then the New York session comes in like this, mitigates the breaker, and then comes back down. This
Wow.
is a bullish. This is a classic bullish scenario. An ICT day. This is what happens. This is what happens. This is the Asian session. I'll just type that out for you so that you can take a screenshot.
Sure.
This is the Asian session.
So normally, if we're bearish and then it's consolidating, it's like accumulation, manipulation, distribution.
Yeah. That is it. This is the accumulation.
Yeah.
It's the manipulation and then the distribution.
Yeah.
Okay. So now what we should know is, now let's combine everything. Okay. Wait, I'll tell you.
Sure.
Let's combine everything now. Time and price, structure, liquidity, everything, inducement, all of them. Because it just gets crazier with everything. And then comes this. London Open, and then this will be the New York Open. This will be New York. Okay. Now we're in a bearish market. Okay. Price was coming back down. Lower highs, lower lows. Okay. Sorry. Lower highs, lower lows, lower highs. And now, once this happens, okay, this is a new range now, from this high to this low. Okay, you get that?
Yeah.
From this high to this low is our new range. Okay. So then why is price doing a pullback? To get into the internal range liquidity. Okay, it gets into the internal range liquidity. And then you see this, I told you the Asian session is an inducement. It created this resistance, which means it's inducing something on top. See that? And then London Open, boom, it does the manipulation, and then it mitigates out of this. Okay. And then where is the external range liquidity? Right here. And boom, it comes back down. That's it. That's very simple. Okay. And on a bearish day, London Open has the most chance of making the high or the low of the day, and vice versa. Okay, I'll show it the opposite way too. You see that? This is a bullish day.
Yeah.
Okay, from this low to this high is our new range, and then price will pull back just to get the internal range liquidity, and then boom, external range liquidity, because this will happen during London Open. Now, if you get this trade from down here, you can chill the whole day just like you want to.
Yeah.
Okay. Yeah, because you know this is the low of the day. Long position. Oh, I'm using inverted chart. So now you see that? Because it will not come down here, because this is the low of the day. The low of the day, because you know, because I told you London Open has the highest chance of making the low of the day. Okay. And so this vice versa for the other one. Okay. Yeah. So if you're bearish, London Open has the most chance of making the high of the day. Okay. Now this is time and price. Okay, that's time and price. Now comes the day of the week. Okay, that's even better. Now this happens on Monday. Same thing, accumulation, boom, manipulation. Wait, I'll just take it a bit higher.
Sure.
Okay. Accumulation, manipulation. So this is Monday, Tuesday, Wednesday, boom, Thursday, Friday. Okay, this is what happens on a bearish day. Okay, Monday will start accumulating. Okay, this is Monday, and then so on a bearish week, Tuesday has the most chances of making the high of the week. Okay, the high of the week. Okay.
So on a bearish Tuesday, on a bearish trend, when Monday consolidates, Tuesday has
Tuesday has the most chances. Like, it's not accurate, because if this happens all the time, anyone could make money out of it.
Yeah.
Okay? Because some days Monday is the high of the day, but most chances are Tuesday is gonna make the high of the week.
Mm-hmm.
Okay, if you are in a downtrend, and then this would be Wednesday. And you see why I told you Wednesdays are good for ping pong.
Yeah.
It's inside this and it just plays. Okay, and then Wednesday, and then on a bearish week, Thursday has the most chances of making the low of the week. Okay, this is not gonna be picture perfect once you get in the chart, but this happens. This
Yeah.
has happened over and over again many times. I have seen this, and then this is Friday. That's Friday. Okay, this is
Mm-hmm.
what happens. So now you see, Monday was itself alone an inducement, right?
Mm-hmm.
Monday was the inducement. Price was coming down like this.
Mm-hmm.
Okay, price was coming down like this. So then Monday it was inducing. It was getting people into doing something wrong. It was inducing these people who's playing support and resistance. Okay, and then imagine you got this trade. This is the high of the week. It will not get back there for the whole damn week. 3
Yeah.
days you're gonna run in profits. Okay, you can do this, and then boom, and then I told you, like, this is something I got from ICT, but ICT never tells you to do this, but I do that because this will come back down and then go back up. Okay,
Mm.
so now once this happens, or else once this happens, okay, you see this inducement, I'll go to the left of the chart and I'll find something over here. Okay, and
Mhm.
then I'll see what it induced, and then I'll buy from here, from Thursday's low. So I've sold from Tuesday's high, and then I've bought from Thursday's low. Now we are trapped in profits. You see that? Sell
Yeah.
and a buy. You see that now? Because you see now, the 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 thing most people see when I do all this ping pong stuff is they think I only trade the 1 minute. But you see how much of things I put into consideration.
Oh, for
How
sure.
you see that? Yeah, like there's
It
so
all
much stuff,
starts the
not
it
one
all
or two.
starts from high time
From
frame.
from the weekly. Like I did not jump directly into the 5 minute or the 1 minute.
Yeah.
Okay. Yeah, I think we did this for like 2 hours, and then I came into the 1 minute. I showed you how to do ping pong.
Yeah. Yeah.
So that's how I do basically because I have nothing to hide. You paid me, so I have to give you everything I can.
Thank you so much.
That's
And
it. So
um,
and this
would
is the
I
vice
be
versa for the other one. Yeah,
what?
sorry.
What? Oh, sorry. No, no. I can't. I'm sorry. I
No, no,
can't.
no. You can ask it. No worry. No worries.
Um,
What
um,
was it?
I was just gonna say. So you trade GU. Is it fine
Yeah,
to do
GU.
on EU?
Yeah, exactly.
Yeah.
These things are fractal.
Yeah.
Okay. So I hope you got this down because this is super important.
Yeah. I got it. I got it.
Yeah, awesome, awesome. So even on EU, it's the same thing.
Yeah. Would I be able to maybe try and just maybe if I share my screen and I'll try and break it down like you did a bit?
Oh yeah, that's be better. Yeah, yeah,
That
sure.
that'd be really cool if I can.
Yeah. Like okay, you can share screen now.
Okay. Oh, it said it's not you need to enable it.
More. How am I to do it? Make host. Okay.
Yeah.
Okay, I'll make you the host. Now I'll have to pay you.
That
Yes.
was my trick all along.
You waited all these hours and now you're gonna teach me.
And I get your FTMO account. All right.
Okay.
So I filled out my chart, but it's I don't want to go through it because it's just like a lot of stuff.
No, now if you do not want to delete this, you can go to the other broker and show
Yeah,
what you saw.
that's what I'm
That
gonna
would be
do.
better, or else you'll have to delete that hard work.
Yeah. So you see, actually, if you see this, you see I was writing, should I draw a fib from here or here, from here to here? So I never,
Oh yeah. So
that's what I,
that is what's wrong. Okay,
yeah,
you've taken out the range wrong.
yeah. So
Now the range is from where if you zoom out a bit, I don't know how. It's like, how can I annotate on this? I don't
there
know
should be
how.
like up the top here, a little drop down bar, and then it should say annotate.
Annotate,
Do you want to send me a photo on Telegram of your screen and I can?
Um,
or
It's cool, but it's not there, bro. No, it's okay. It's okay. You show me, and I'll show my chart again, and then I'll tell where you went wrong.
okay. Oh, you know what? I could do this maybe if you share your screen and then I'll send you a photo of
Ah,
where
yeah, you can
I,
annotate. Yeah.
and then
You can
oh
annotate.
actually
Yeah.
no, actually it's fine. I'll do it. I'll do it.
Okay.
Um
Okay.
okay. So if you're looking at it like this, so yeah, so for me I can see like we didn't actually I can see we broke this, but we didn't break from
Yeah.
here. So
Here.
I'll say the range is like from here to or down here.
Okay. But I'll tell you this: that high you marked was not a real high, because where was the highest high that created it?
Here.
Yeah, you see that. So
Okay.
all of those highs would act as internal range liquidity.
I'm just gonna delete.
Get that?
I'm just gonna get that little. Was it here? This dot. This here.
Yeah.
Okay.
From
Oh, which blue is it? Like this?
okay. So the high would be up there.
Okay, so from here
To there. Yeah. That's the swing
to,
points. Those
to
are the swing
here.
points. So yeah, you can take that. Yeah, that is the whole range. That's the range. That's the range. So we are in a discounted price here.
And then, so once I do that, so I can just
Yeah.
look from like, let's say from here to here, and then I've got the
Yeah.
50%. So I know,
Yeah.
okay, anything above there. And then I just do the same for the daily. So then on the daily, if I have a look, it's still from here. Oh, sorry, I'll go all the way out. Yeah, so on the daily, am I still, see, I don't know why they just like going from one time frame, because I know like it's so far away here.
Yeah.
So then,
So what you should do is this. Now we're intraday traders, right? Like,
yeah,
so you're not interested in swing trading, right?
not really, no.
No. Okay. So now do not look that far back. Okay. Just look what's gonna happen next week, not the next month or next year. So
Yeah.
now, like the way you zoom out, right? That's what a swing trader would do. Okay. Now we're intraday traders. Just zoom in, zoom in, zoom in. That's enough. Yeah, that's enough. That. Now take the range. Now get the range. You see that?
Okay, so
Now
from
you
like
can
here
get the
to
range.
here. Yeah.
Yeah. Now first mark out the structure. Now mark the structure.
The structure, so like
Yeah. Now
from,
that low. Okay, that was COVID news. Okay, that was COVID news.
okay.
Okay, it broke structure, and then
Oh, sorry.
okay, cool. No,
Yeah.
there's a low below that. Not that high. Not that high.
Oh, from here.
No. You're not getting that.
No, it's sorry.
View options. Ah, here I got this annotate thing.
Okay,
Right.
cool.
Okay, cool. Now I'll show you.
Okay, cool.
Ignore all of this. Okay. Ignore all of that.
Oh,
Okay.
okay.
Now, can you zoom in a little bit? Okay. Now, this is our structure. Okay. This high, low, high. Okay. And then this would be the 50%. Wow, I drew a straight line. Okay, this would
That's
be the
impressive.
50%. This would be the 50%. And then this is a new range from this low to this high. And the price comes back in to get the internal range liquidity. Okay, now can you zoom out a little bit, like very little? Okay, okay, that's enough. Now you see this happen. Price took out liquidity from these lows.
Yeah, I saw that one.
And then broke this structure. Okay, now this low becomes a strong low, right? This low becomes a strong low because it did the manipulation and then broke structure. So now we can expect this low to hold. So then this would be shit, that was ugly. Undo. Can you mark that? Can you mark that order block, please?
Yeah.
From this right here. Okay. Now put it right here. You see how this low did not actually mitigate it.
Mm-hmm.
Now where is the inducement? Where is the inducement?
Yeah, this will be the inducement.
This
And
will
then
be the
we
inducement
can
now.
do the 50% of this.
Yeah, or the wick.
Mm-hmm.
You see that? You see that? Now, in my eyes, like I do not play EU a lot, but in my eyes, I'm waiting until this low has been taken out. But it's giving reactions, and we must use the correlating pairs for much more confluences. But since GU is going up, it might just go up like this. It reacted off this order block. Oh,
Mhm.
shit. It reacted off this order block, and it might just go up. But see, because GU is doing that, this might do that too. But let's see though. I'm just telling you how I view the market, because I see this as an inducement. And even if price goes up like this, the next move would be right here to take out this low. For sure, this low will be taken out for sure.
Mhm.
That's how I view it. That's
So
what I told you.
yeah,
So now what
I
price
would.
did was this. Yeah, from this low, yeah, that's that high.
Uh-huh.
That's range. That is the range. This is our current trading range. That's it. From that low to
Okay.
that high.
And then
Okay.
I'd have to either wait for this to break lower, and then it'll be
Yeah.
from here to
But
here, or if
but
it
if price
breaks.
breaks this structure, if it breaks this right here, this structure
Yeah.
right here, then it would do this. It will come back down, then boom, it will do that. You get that?
Okay.
But wait, because this is it. Price went up like this. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then this failed to go higher, which means it's a shift of market structure. Okay, and then boom, broke structure, went back up, came back down, went back up, came back down, which means we are still bearish, right?
Mhm.
We're in a bearish trend, and then went back up, came back down. Now, if price breaks this right here, you can expect this. You get what I'm trying to say?
Because this is like the stop here and then a break of structure.
Yeah,
But
yeah.
but we would still, this would be the strong high. We wouldn't expect it to break it.
Sorry, no, you're wrong. This is the weak high. Okay, this is the weak high. This is the strong
Sorry,
low.
sorry, yeah. It didn't break
Yeah,
this. Yes, my bad.
yeah.
Sorry.
Because and this is the external range liquidity now.
Yeah.
Okay, that is the external range liquidity we should be targeting for. So now I'm telling, because price came back down like this. Okay, if price really, like if it really mitigated something here, sorry, it has to go back and do this, but it did not go do that. It went and then it started falling back down, which means I still expect this and then this, and then price to come into this area and then higher. That's what I expect on EU. Let's see though, like I might be wrong, but anyway, I don't trade EU, so it's okay.
Yeah. Okay,
I'm
cool.
just
So
saying that's what happened.
yeah, for
Because you
sure.
see, first inducement was right here and then took that out, but it never mitigated something here. So can you drop down to a 4 hour, please?
Yeah, that's what I was gonna say. I want to do it from top to bottom.
Yeah, let's see what has happened.
Okay, so do you want me to zoom out like this?
Okay, now zoom. Can you zoom out this order block, the daily order block?
Zoom out further.
Sorry, zoom in the daily order block. This.
Oh, sorry. Yeah.
Now, yeah, you see this? You see this? You see this candle? See this candle? This is the candle that did the damage, right? It's the candle that took out liquidity. So we can refine it down to that. Yes. And now see if now zoom out a bit and see if price really mitigated it.
No, it didn't.
Yeah. Then what it makes this an inducement, because now since this was a major low, and it even broke this structure. Okay, it took out some liquidity from this and it broke structure. Now people would view this as a strong low. But we know that the intentions within the range has not been filled yet, completed yet. And the next thing we should consider is that EU and GU are correlating pairs. But since GU wants to go back up, and up like this, EU might go too. But if EU does this like this, GU might come back too like this. Okay?
Yeah.
Get that?
Yeah.
Because correlating pairs. That might happen. Must always, that's it I said. Take partials and then leave a runner and then look for the reaction. If it's giving break of structures, close the positions. That's it.
Okay.
That's
And then So now that I'm on this 4 hour and we have, this is the daily range.
Yeah.
Is this still the range? So for 4 hour, am
So
I?
now zoom in. Now zoom in. Zoom in. For the 4 hour, I'll tell you what the range is. Okay. Go to the right side of the chart. Okay. Now, okay, keep it like that. Can you drag it up a bit? Little? Okay. Okay. Cool. 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 Now this is our range. Okay. Price went like this. Higher highs. See lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Okay. So now our range is from this high to this low. Okay. Now since price mitigated something here, we can expect this to get broken. Okay. But now the thing is this will act as intermediate term structure because this is the whole price swing.
Mhm.
You get that? From this high to low to high, and then we're expecting a pullback. Some price might come until here to a premium price and then do this once again. Okay, but in case price breaks this, okay, we confirm that we're going to be bullish now. But until this high has been broken, we're bearish. You get that?
Yeah.
I hope you're clear with what I told you.
Yeah.
And then
Yeah.
all of these highs that acted as strong highs during the previous times, this high, these highs, these highs
There will be
would be liquidity.
Yeah.
Yeah,
I was about to
exactly.
say to you. So once we break like this area here. So
Yeah.
once
Now,
we
once we
here,
break that, expect a pullback,
and we
something
look
around
for buys to take
here.
all the way here until we get to
Yeah.
this, and then we can
Yeah.
expect to sell again to take out this external
Yeah.
liquidity.
Yeah.
Yeah.
And price might break the structure too, I get, but let's see. So after this high has been broken, I told you, after a major high has been broken, we must expect a pullback. So we might get a pullback from somewhere around here. Price might come up, and then which means it broke structure, plus it took out liquidity from this, and then it might come down to somewhere around here because this is inducement, and then do this.
Okay.
Okay. This is what I'm not telling you this is what's going to happen. I'm just telling you what I think.
What
So
you think could happen? Yeah.
okay.
Yeah.
Yeah, what I think, because I don't trade EU.
Yeah. Yeah. Sure.
This is what I see right now. Right now, this is what I see.
Okay. And then I just
Okay.
go down again, 60-minute. So I guess where I get stuck on, I know this is like, we're thinking, okay, if it comes here, then we have to go.
So do this, put two dots on this from
Okay,
this.
sure.
Okay. From this, this. Cool, cool, cool. And now mark the discount and premium. Have that line. It's okay if it's a bit messy. Now you can like go to the Fibonacci settings and then delete this trend line and then delete the 1% and all that. Yeah, and then delete the 0% and the 1%. Okay, yeah. Now there you see. Now it's clear. Beautiful. So now we're in a discounted price right now. Right now price is at a discounted price. Now let's drop down to a 30-minute maybe. Okay, 60 minutes. No,
What do you think is better, to go daily 4 hour 30?
Let's go to a 30 hour. 30 minute.
Okay.
Okay. Now, can you zoom in a little bit?
Oh, so I get so caught up always zooming out.
So this is how price came back down. Low, highs, lows at the breakout structure. Price broke structure. Okay. And then it came back down. Didn't really come into the 50% of this range. Okay. But it's still going up. Okay. Now, which means now this would be a range. Okay. From this low to this high is a range. It came back down. Okay. Now I told you after this high has been
From where is our range?
Okay, wait. I'll show you. Yeah. I'll show that to you. So price came back down like this. Low, high, low, breakout structure right here. Okay. You understand that? We broke structure.
Yeah.
And then price retraced, and then now it started going back. Okay. Now our range was from this low to this high. Now since price retraced, and then now it's going back higher, and it even broke this structure. Okay. Now what would it do? Okay. Now we still do not have a range until we still do not have. Okay. Okay, now I told you. Now where will the pullback come from? After this high has been taken out.
Mhm.
Okay, so expect a pullback
I
after
think.
this high has been taken out. Okay, now then it will create a new range from this low to this high. And now this will be the inducement though.
Mhm.
So price might come back down inside this and do this.
Mhm. Into some,
Because
maybe to
this did,
this here.
yeah, because this did not do anything specific. And now even smart money traders would look at this order block right here.
Mhm.
And because it retraced people, most of the people would place their sell stops below this, the breakout traders, and the stop losses below this.
Mhm.
You get that?
Yeah.
So now let's look at something below it. Maybe this. Yeah, this would be a good POI. This thing right here.
Mhm.
No,
So,
I'm not giving you a signal. Just mark it out and see if it plays out.
bro, don't worry. I'm not. Yeah. Okay. Would
Yeah,
I
you've been trading, you know.
would I even so I think I realize what confuses me sometimes is like if I go back to the 4 hour
Okay.
and you see, so there was like this, right? Sometimes I think I take it like too literally and sometimes not. So whatever went down and whoops. And I'll look at it like each little thing like this.
Yeah.
And then
So this is so now if you take this like this is just a corrective move. You see how corrective that is? Because the momentum is to the downside and this excess liquidity, trend line liquidity,
mhm,
and it will come back down like this for sure.
yeah.
So
So
if I think that answered your question.
yeah, so this here then that will be okay, that will be
Yeah,
the break. And then so that's why on the 30-minute
yeah.
that so this was maybe like okay, yeah, so that's a strong push up. And then
Push up.
so how come this is not going to be the strong high?
Because what did it do? Okay, because now I told you this has no inducement yet, right? This has no inducement yet. Okay, and if you zoom out a little bit, okay, if you zoom out a little bit, okay, now this was what price was doing. Okay, I'll show you.
Mhm.
Price was coming back down like this. Let's take it from here. Low, high, low, high, low, and now it's coming back down right this. You're right, this is a strong high in our eyes. Okay, but what we know is that this move has been originated from an extremely discounted price on EU. Am I
Mhm.
right?
Yeah,
Okay,
okay,
and
yeah.
it came back down, and it even, that's why I told you the higher time frame perspective is very important.
Yeah,
Okay,
okay, because
and
that's
it
like
even
four.
broke, yeah, it
Yeah.
came back down and it even broke the structure, a 30-minute structure. You see that?
Mm-hmm.
So now price might just go like now this, the strong high which you mentioned, this right here would be a trap.
Okay.
So we can take something from here to sell off from.
Okay. And then this becomes once this breaks
Yeah,
this, that becomes our new range once there's a little pull.
range. Yeah, but the real range is from this low to this high. For sure, we'll get a pullback from right here. We'll get a pullback. So then from this low to this high would be a real range, and all of this would be liquidity.
Okay.
You get
Sure.
that? I
Yeah.
hope you're clear.
Yeah, yeah. Okay, yeah. So I take it
Good.
from here. Oh, whoops, click the wrong thing. Yeah, from there to wherever it is, it goes here
Yeah,
before.
wherever it is. Yeah.
And
So
then
can I
okay.
annotate for a while? I'll tell you this.
Yeah, for sure, definitely, definitely.
Yeah, yeah, yeah. You think
Um,
so? Price is going up like this. No, no. I'll show it to you like this. Now, price is doing this. Okay, price is doing this, and then this what I showed you now is 4 hour time frame. Okay, and now this is the daily time frame. Okay, now how we determine the range is that if price keeps doing this, which makes all of these lows hold, because we're bullish on the 4 hour, we're bullish now. You see that? So all of these lows will hold now. You see that?
yeah.
Okay, so now once price does this, once it breaks this structure, okay, the intermediate term structure, now we get the new range from this low to this high. That is how a range will be created. Intermediate structure will be broken. Then that is when we take this as the new range. And now since price is fractal, okay, now we have this new range from this low to, from this high to this low, okay, and this is the breakout structure. Then we wait for price to retrace into a this premium price, and then we'll sell it down here, which will be the pullback on a daily, like this, okay. And once price starts doing this once again, it retraces like this, and then once it breaks structure, now we know the pullback is over. We're going to go higher for this external range liquidity. You get that? This external range liquidity. And then once it does this, price is fractal. This is our low. This is our high. We wait for a retracement, and then boom.
Okay.
I hope I made this clear.
That is clear. That's much clearer. Like, okay, cool. So I can see now that it's becomes like in the daily, could that be our strong low, let's say?
Low, yeah.
And then so once we get to here, and then we're in discount now, that once we break here, that it will be.
So this will be the confirmation entry right here. And this will be the high risk entry right here.
Yeah.
And awesome.
Because if we had like, let's say in here, let's say in here,
where people get trapped is there'll be order blocks right here, right here, right here, right here. But say this was induced, then this is gonna work. That's how it goes.
Yeah, and if we had like this, let's say like it went there, and we had the break of structure here, but because we're in premium, we would just think that they're going to trick us and go back down. This is going to be
exactly.
Okay, cool.
That's gonna be just inducement and stuff.
Okay.
I hope you're clear with that.
Yeah.
You see, the structure and the range and liquidity is what plays the major role.
Yeah, for sure. It's
plays the major role.
Yeah. Okay.
Cool. So I hope you're clear with that.
Yeah, it's become much clearer. Yeah, thank you so much.
Awesome. I hope you got something out of it now.
Oh yeah, for sure. Could I try and just show you one trade on EU and then finish? Because I know we've been so long. Sorry.
It's okay.
Okay. I delete all this. So, what was the date? It was Monday. Was the 5th. So I just put it here. Oh, sorry. Okay, so let's say just for Monday, and I'll do replay tool. So let's say you said to start on the daily. Yeah. So, okay. So I'll try and delete this one now. And this. So on the daily, we would say that this is strong low. Because we took our liquidity and then we broke it.
Yeah.
So we could do something like from, I mean, it's too far away. I need to zoom in. Yeah.
Okay.
Yeah, my bad, bro. Sorry.
Because that's your issue. You you zoom out too much, and then you'll get too much information into your head, and then you'll get stuck.
Yeah, I saw.
Don't care about this. Like, no use.
I saw like March 20, and I thought, what am I doing there? I'm intraday.
2020.
Yeah.
Okay. This is your range, intraday range.
So we had that break, and then here.
Okay.
Is that right?
Yeah, you're right. So mark this for sure, so that you don't get lost. Took out liquidity, and then it broke structure right here. Let's mark that, and then it's gonna be clear.
Okay. So I say took out liquidity,
and then it broke structure right here. Cool.
Okay. So then
now that makes this a strong low.
Yes. Yes.
Okay.
Okay. So now I know this is my range. So
Yeah.
I'm gonna go down to then the 4 hour.
I'm sorry, which one
Oh,
was your range? I think
uh,
you missed. Okay.
oh, sorry. Um,
Oh, it has to be from this low to this
so
high.
here,
You can touch this. This will show you where the thing is. No. You're right. You're right. I thought it was right here. Okay. My bad. The 50% was right here. Cool.
you thought I did it from here?
Yeah, I thought you
Okay.
did it from here.
Okay. I was like, oh shit, I don't understand. Okay.
No,
Um,
you're right.
okay. So then I just go like to the 4 hour, and you said it
Okay.
was so we're looking from here
So,
and
bro, can you get back to the daily?
oh yeah.
Okay. So now this is a strong low. Okay, and then this would be the weak high. This is the external range liquidity.
Mm-hmm.
Okay, keep that in mind. We're gonna target this. Okay,
Right.
but if price breaks this, we're gonna keep going down lower.
Yes.
Okay.
Yeah.
Okay, cool. Now this is the daily,
Mm-hmm.
and then the 4 hour structure is this. Okay, it went higher highs, higher lows, higher highs, higher
Oh
lows,
wait,
higher highs, higher lows, higher highs. I'm sorry.
I'm not on the 4 hour yet.
Oh yeah. Good.
Sorry.
So now on the 4 hour, this was the structure. It went higher highs and then it broke structure right here,
Mm-hmm.
retraced, came back down, broke structure once again, retraced, came back down, broke structure once again, retraced, came back down, broke structure, retraced, came back down, broke structure. So our 4 hour range is from this high to this low.
Mm-hmm.
You see that?
Yep. So if I put from here to here, and then I just draw another fib, and then I know that we're in the discount of daily as well.
Yeah.
Then I go to 30 minute,
Okay.
and on the 30 minute, this is so we didn't really break here. We
Break
did,
it, yeah.
yeah. So we didn't break it yet,
But
and
it will be taken out for sure.
yeah.
So you can expect something from this.
So I want to look for like the kill zone. So I think it's
Okay.
I do New York time, so I think it's 2 a.m. to 4 a.m.
Okay.
So if I'm looking at this, I'm thinking, yeah, we're still. Would it be range
Right now.
from
Right
here?
now, our range would be. All right, you got that. This
Yeah.
is a new range.
Yeah.
Okay. This is a new range, and this
Okay.
would be premium prices. And
Mm-hmm.
now we might expect this to hold. But
Mm-hmm.
what we should take into consideration is that this low is a strong low because it took out liquidity and it happened during NFP. I'm sorry, yeah, NFP or FOMC, FOMC. Okay. And then this is the what do we call the extremely discounted price of EU's daily time frame. So, and this acts as a strong low because why? Because why? It did the manipulation and then broke minor structure.
Yeah.
Okay. So now this could even do this, break this high because this is strong. You
Mm-hmm.
see that? That's strong. So
Okay.
now this is our range, you're right. But we should know where price is originating from,
From
where
here.
this move was originating from. Okay.
Okay.
I hope it's clear.
Yeah. Because I took a buy from here, but now that
Okay.
I'm looking, that's in premium. So
Yeah.
but
Oh
it
yeah,
was
yeah.
but it was
Okay.
like it was actually um yeah, it was in premium for sure.
Yeah.
But
But no, I'm telling you, I think you're overcomplicating this.
I
You
think
know
I
these
am.
things, you know everything. You're just overcomplicating stuff.
Yeah.
That's the thing.
So is this premium or discount on this? Because
No, I'll tell you what.
yeah.
Just have the 4 hour. Now remove this 50%. Have that removed, and then have that removed, and then they think of the higher time frame structure
Yeah.
only.
Yeah.
Okay, higher time frame structure only
So
because
it's in
now
discount.
can you zoom out for a while on 4 hour?
Oh,
Okay.
you want me to go to the 4 hour?
Yeah,
Or?
go to the 4 hour for a while.
Sorry.
Okay, and then this was a real move. Okay, Then price took out liquidity from all of these lows. So once sell stops have been taken out, the next trade would be on buy stops. So buy stops would be right here. So now we could expect this. You get that?
Yeah. So
So
how come my buy would be? How come my buy here is in premium, but it will?
but it was on a discount on the 4 hour, right?
Okay, so you can use the 4-hour discount even on this lower time frame.
Yeah, use the 4 hour discount and premium prices. That's easy.
Okay.
Because you have the recording, right? You recorded it, right?
Yeah, I recorded.
Yeah, you can watch this over and over again, and then it will make sense. Because
Okay.
you're overthinking this. That's
Yeah, I think so for sure. Because I ended up taking. I actually ended up taking. Oh, actually, I didn't take it, but I wanted to take it, but I was just like too afraid.
Because that's liquidity right here. You see that?
Oh, sorry, I didn't mean to click this.
Liquidity, and then 50% of the week.
Yeah.
Maybe I did not take this.
Yeah, no, it actually did.
Price has to come back
it
here.
Played out. Yeah.
Boom. I told you. You.
Okay, I got a lot of back testing to do.
Okay.
Yeah. Cool, bro. I don't want to keep. It's already been so long, so I just
okay.
I do all the. So you want me to try and send you charts every day of my back test? Is that what you said?
Yeah. If you could do that, like I'll build a new. I'll make a new group. I'll make a new group, so then you can do that.
Okay. Cool. So I'll do that. So, what do you want me to do each day? I want to make sure like I put in the work. So just let me know what is it that I should I should do it.
Just send me backtested charts, at least 20. Just put it in our channel, in our group. Okay, just backtested charts, because I gave you my confirmations now. This is what you should look for.
So yeah.
I'll do this. Okay, this is what we should look for. Break of structure, range, liquidity. So the discount and premium first, and then liquidity below discount price, or maybe something like this, and then the POI. That happens again and again. Just look for that every day, and train your eyes. Okay.
Okay.
Because I'll add you to the group, and then you'll know what I'm talking about.
Yeah, I think if I start to
like how we do the back testing.
Yeah, and do you break it down from the high time frame to the low?
Yeah. Yes. I'll break it down, and then you'll see everything clearly.
Okay. Perfect.
Then you'll be able to see everything.
And when you say that send 20, what do you mean?
Because for sure, I'm sorry, like the same thing, you need to see it happen like 20 times. Like now, if I take this, for example, okay, price took out liquidity from these lows and then broke something on like minor structure like this, and then got induced and then came back to this week and then went higher, something like that. I want you to see that same pattern again and again and again on the charts. That's it. Then that's it. If you see that, like if you train your eyes to see that, you're good. That's all you should do.
And that's
because if you do at least 20 charts a day, like you're gonna see results in weeks, in like 2 to 3 weeks, or at least in 1 week, you're gonna see results for sure.
Okay. And when you say when you say like 20 charts, you mean like 20 trades?
Yeah, 20 trades. I don't care what time frame it is, and it's okay no matter what the time frame or what pair it is, because this just happens everywhere. It just builds liquidity and then it fuse people. Okay. So if you can train your eyes to see that, it's good.
20 trades a day or a week?
Yeah, a day.
A day. Okay, cool. So I'll have to do I'll have to do a few different pairs like EU and GU.
Yeah. EU, GU, anything, any chart.
Okay. Cool, man. I'll thank you so much for this. It was very long.
Awesome, bro. Awesome.
Sorry.
Yeah. Because I had to give value to your money. I had to teach you what I know.
Yeah, actually, not even a question to like keep going on with this, but just out of curiosity, like I always find it like so amazing. Like, you know, someone like yourself, you obviously
Okay.
know what you're doing, very successful. Like you don't,
Yeah.
$80 is nothing. Like it's,
Nothing.
it's simple. And like, so what made you
Yeah,
want
it's a
to do that?
flexible price. So
Yeah.
no, I got many DMs since I opened my journal. I had more than more than 50 DMs.
Yeah.
Okay, like asking me to teach this. But the thing is, I put so much time and effort into this. Like, I lost my job and everything because of COVID, and I had because a dollar is equal to 200 rupees in here, and you know, $80 is equal to 16,000, which means if I'm doing a local job in my country, I'll have to work for at least 2 months to get that money, 16,000 rupees.
Oh my
Okay,
gosh.
so that is why I value it so much,
Yeah.
because for you guys it might be a very little amount.
Yeah.
Okay, but for me it's a big thing, because that's why I take it as a big thing, because we have to work at least 1.5 months. Because the previous job I did, I'm 21. Okay, I
Yeah.
did a job, like I was at a hotel. I was a chef. Like I was
Hmm.
chef de party. Yeah.
Hmm.
So I lost my job because of COVID, and then I I didn't have a rupee. I like not, I was not able to do anything. So what I did was I started trading. Like I went to a job at a cattle shed, and then that is how I started. Honestly, I went for a
Right.
cattle shed to work at a cattle shed, and then so I got around $250 in 5 months. I worked there like very hard working, 12 hours a day. So I got $250 in 5 months, and then I invested it into a scammer. Like
Ah,
everything was gone. Everything was gone. Like I was so pissed, and I even had these suicidal thoughts, because I have to run my mom and dad. They have no jobs because of COVID. Like
yeah.
all of the stuff. So I worked hard. Like I did not give up. I did not sleep until I mastered this thing. I
Yeah.
did not sleep. So like that thing has to have some value, right? That's why I do not give it out for free, because I put so much time, money, and effort into this. So
Yeah.
this has to have some value, and this is life changing, honestly.
Yeah. Yeah, for
That's it.
sure.
Yeah,
Definitely. Wow.
that's why
Well,
I shared this with you. Like
yeah.
honestly, it has to have some value, because it took so much effort for me to build this thing. Because I'll have to give credit to where credit must be given. Okay, I took these concepts from ICT mostly,
Yeah.
but he does not teach you how to trade on the 1 minute, but I do.
Yeah. Yeah.
Concepts on a 1 minute chart. That's what I do basically. His concepts on a 1 minute. That's it
Yeah.
though.
Yeah.
Yeah.
Oh my gosh.
I
Yeah.
hope you get some. So that's why I value your money so much, because even though I trade FTMO, and I'll be frank with you, I'll get more than $3,000 a week. Okay.
Yeah.
Yeah. So sure, I'll get because of FTMO. But even then, I know people, even though they trade, they are not going to earn that much.
Mhm.
And I still have that mentality that $80 is so much for me.
Yeah.
Okay. $80 is so much for me. So I do not want to put that into waste. Like I can tell that you're living in another country, and then for you it's nothing. But for me it's a big thing,
Yeah.
right? So
Yeah.
I have to give value. So I
For
hope
sure.
I gave some value. At
Uh,
least a bit.
honestly, you gave a lot, and it's going to be tough for me to like change my ways almost because
Yeah.
I'll just give you an example here. Like my eyes straight away, I saw like this is what I would have thought like this. You know, liquidity
Yeah,
taken out,
liquidity grab,
break of structure.
break of
So
structure.
then I'll just look for this order block because it's also got
Yeah.
uh,
Mm.
a
Now
little
you get why it won't work.
induction. What?
Yeah.
Sorry?
Now you get why that won't work, because we missed the high time frame perspective.
Yeah, exactly. So
Yeah.
yeah, and then I wouldn't take it because on the 1 minute I don't get the confirm. Like my
Confirmation.
confirmation is like the stop hunt breaker market structure
Make
RTO.
up.
But
Yeah.
at least with yeah, I have to completely change how I think, but
Yeah.
it will
But
be
once I add
worth
you
it.
to the group and I'll put my charts, you'll be all right with it, I'm sure.
Okay, cool. So you'll
Yeah.
do that now after the call?
Yeah, I'll do that. I'll do that. No worries. I'll
All
do it.
right. Awesome.
After
Thank
the
you
call.
so much. What would
I'll
you
thank
prefer
you
I
for your
call this?
money and time.
Oh no, honestly, thank you. You don't have to thank me. Thank you very much.
Okay. Cool.
Should I call you
What was it?
Alchemist or Udara or what,
Anything you want to.
what do you prefer?
Alchemist is better though.
Okay,
I
sure.
feel like
I like it
better
as
like
well.
Cool, cool, cool.
Magical.
Yeah, it's good to know you, man. It's good to know you. You're so
Yeah,
cool.
thank you, man. And yeah, hopefully I can I'd love to get funded soon. So
Yeah,
yeah.
yeah, I'll help you throughout the journey. No worries, bro. Just
Thank you, bro.
I'll
It's
add you to
gonna
the group, and then let's do some back tests together every weekend. So
bro,
I'll
that'd be
even try
amazing.
sharing some charts before they play out. So
Mhm.
then y'all could watch monitor price section, not a signal. Y'all could monitor price section and then get trades from there.
Yeah.
So let's do something like that.
Oh, bro, honestly, like I know like of course I'm from Australia and it means that, like
Yeah.
I have more money in comparison like when it goes
Yeah.
over, but like in Australia prices are so expensive and I'm a uni
Expensive.
student
Yeah.
now that like
Okay.
the only way I can have a good life is if I can get funded 100K
Funded. Yeah.
FTMO. So
Yeah. Let's do it, bro. No
yeah,
worries. But
so
don't be in a
thank you.
hurry. Don't rush things.
Mhm.
Things will come when they are meant to come. So don't rush
Yes,
things. Let's do it slowly. Go
yes,
with the flow.
yes, sir. Awesome. Thank you
Awesome,
so
bro.
much, my
Awesome.
brother.
Awesome, bro. So if you really got something out of this, you can just leave a review. The
I will.
honest review, like if I need to improve somewhere, or if I to improve something, or
Yeah.
if I did bad, or if I did good, anything of that sort.
Yeah. Are you able
Okay.
just to like blur out my name and my photo?
Yeah, yeah, sure. I'll do that.
Okay,
Sure.
cool. Yeah, I will
Okay.
I'll leave you a review either.
Awesome,
I
bro.
might
Awesome.
go, my girlfriend's in the other room, so I might watch a movie with you now. But if
Okay, bro. No
tomorrow
worries.
morning I'll leave you a review.
Yeah, no worries. No worries. Thank you, bro.
Thank you so much, my
Okay,
man.
bro. I'll wind it up
Thank
now.
you. I
Thanks
really
a lot, bro.
appreciate it.
Thanks a lot. Awesome, bro. Awesome. Stay
All
safe.
right. Bye.